All right, there we go. We
Good
are
morning.
supposed to be live, I think. Yeah, looks like it.
Good morning. Good morning.
Good morning,
Good
everyone.
morning. Yeah, I need myself. Is that coffee or is that tea, Ashley?
This is coffee. This is my second one of this morning.
Nice.
I've been up
well,
since about 6:15 UK time. So yeah, this is my second one of the day.
Yeah, so for everyone tuning in, we have myself, who's taking care of my sick son, staying up almost all night. We got Ashley, tired, busy week, and we got LJ, also stayed up half night.
I don't think LJ sleeps though.
So
yeah, I mean, yeah, but normally, like, you can see the bags under my eyes today. Like, I'm extra. I had 2 coffees, 2 monsters. I've got, like,
Jesus, monsters as well.
Oh my
caffeine
God,
going here
LJ.
as well.
God, you're not going to sleep at all.
I will sleep. I'm right. This is the only thing keeping me going right now. It's like my lifeblood. I'm pretty sure I'm up to like close to a gram today of caffeine already.
Oh my God. Well, okay.
So, and I've got another half the white monster left in here, and still getting through that.
I don't know how you do it. God. I can only drink it when I'm doing a very long drive. It's the only time I can drink a monster. Other than that, I don't touch it.
I drank a lot of monsters and Red Bull in the past, but now I'm like, nah. Coffee for me.
Red Bull reminds me of being younger, and I can't go anywhere near Red Bull.
Look, Monster's better to drink by itself, right? For sure.
Monster
is the king. Monster is the king. Yeah. It
can I just be the person saying like that's I definitely think it is poison and nobody should drink it. But LJ, I mean, you're
this stuff is not poison, all right?
It is.
I have an app. No, scan everything up, and all the alarm bells go off when you scan that.
It's the God's tonic, all right? It keeps us alive. It might kill us later.
If any officials from Monster is watching, like, we're not interested in a promotion. We're not interested in a partnership at all.
No. I am.
LJ might get limited.
LJ is. Right. You can reach out to us and we can put you over to LJ. Just don't give him like a whole crate because we want to
wear it on my head. the whole time. All right, I'm happy to put the M right here. Wherever, on my jacket, something like that. Hit me up. Hit me up.
You sound a bit
Please.
desperate, if I'm going to be honest.
I need more caffeine. I am desperate for caffeine.
Oh, you're not interested in the money. You just want the caffeine. Okay.
Just caffeine.
Yeah, I just want the
Do you
caffeine.
trade when you're like this tired? Because I know that I trade badly when I'm this tired.
Yeah.
I still do. Mainly probably because I've done it long enough that I'm still like in the groove, that kind of thing. But sometimes at some points it will go like, no, I can't. Like I've had other times where I literally have fallen asleep in the chair where I just lean back and I've actually fallen asleep where I'm waiting for some trades to get through. I've got a bunch of hedges. I've got multiple accounts going, so I do have to monitor it. And I've found I've just fallen asleep, dozed off for like 3 hours, woken up later, stuff was shifted around. I was like,
do you go outside or do you just stay in that room?
I do go outside. I go for my walks. I go to the gym every day. So yeah, all that stuff. Yeah, very active. I used to play rugby and stuff, so still very active, all that kind of thing. But that's part of why I'm so pressed. Like trying to squeeze everything in.
It's hard.
Trading, plus work, plus streaming. Yeah, so many moving parts. And then you got family and other, personal whatever stuff. Oh God.
No, it's difficult.
Yeah, definitely.
It gets chaotic.
Especially like me, if you've got a full-time job as well, trying to squeeze that into your day, plus trading, plus the gym, plus seeing friends, plus seeing family. It gets a bit too much.
Exactly.
All right, guys.
Are you guys in any trades?
So I was
on that same topic.
I was in one this morning. I will share my screen.
Let me get that. I'll have to set up. Okay, I haven't set it up in the background. So let me quickly.
No, that's fine.
Let me quickly get that set up for you. And
precisely, Louis. By the way, precisely. That's exactly it.
Am I lagging? Yeah, it looks like I'm lagging.
A little bit.
Yeah.
Do you want me to stop trying to share my screen and wait till you're ready?
No, it's all good. I can fix that here.
Are we doing the secret giveaway today as well?
Yeah, we're doing that. Yeah, we're
because I like you said before, but didn't put the
there we go. So as anybody that tuned in last week will know that I do scalping in the morning on NAS. And what we were just talking about then, if you're tired, it's a bad time to trade. So I have a set take profit and a set stop loss for this one certain strategy. And as you can see here, this is my exact strategy as I should have got in, and it would have been my 2R as it normally is. But because I was tired and because I got in a little bit later, I then didn't think that I need to shorten my take profit. So therefore, the difference between actually sitting down, concentrating, making sure it lines up correctly, meant that this was a loss instead of the win that my strategy showed me that it should have been. So yeah, that's what I was saying to LJ a minute ago. Do you still trade when you're tired? Because I know I trade on my phone quite a lot when I'm walking the dog, which you might be able to hear in the background right now. So I'm normally in and out of a trade. So the second I see a setup, yeah, but like this one, I got in a little bit later, which meant my take profit was a little bit higher. And as you can see, missed, which meant the difference between on one of my account of $600 to negative $300. So yeah, lesson learned for myself. But every day is a learning curve. I've not took it as a bad emotion. It's not going to ruin the rest of my trading day because I've learned a lesson from it. My rules show me that it still worked. So now I'm happy that it still works regardless of me still taking a loss. But my little group of traders that I have took the win, so that was quite nice.
Do you guys find it difficult to, like, for me, for example, yesterday I took the decision not to trade because I was going to have my son at home and, so I took the decision, okay, I'm not going to be trading, but I think it was easy not to trade because I didn't really have the time to trade. Yeah. But if I had the time to trade, I would probably do so, even if I took the decision not to trade. So I think, we all have these ideas, we all have these rules, like, okay, I'm not going to be trading today because of this and that. But then it's like, you're looking at the charts and you're like, well, I do see an opportunity here.
You still do, yeah.
Yeah, like, why not take that opportunity? But then you think about it, you're not in the right mental state, and that's what I kind of feel like today.
If you're not mentally there, I know, because every day I'll write down what trades I've done and how I felt on them. And if it's days where I've not felt well, or there's something going on in my life personally that's affecting the way I feel, then I have a bad trading day, or I go against my rules, or I chase when I shouldn't be chasing. So whereas the days where I've been to the gym, everything's going well, I'm happy, I'm content, I'm in the right setup. So yeah, I'm more of an emotional trader, so I know it triggers me if I'm not in the correct state. I know not to trade now, which has took me over 2 years to learn that.
Yeah, and super to follow.
Yeah.
Do you want me to remove my screen on LJ? Have you got any setups you've been in this morning?
A couple small ones.
Go on, let's see.
So hang on, where are we? There we are. All right, so took this earlier small euro-dollar trade through here.
That.
We end up running. I took it way too early, but I was just looking for some small bites out of the market right now. Yeah. I feel like, I don't know what you guys reckon, but this week has been very odd. We've been very back and forth. A lot of desynchronous activity. None of the correlations are holding up. Everything's sort of running a bit rampant. So I'm focused on just taking bites out of the market in total. So beyond here, we did end up having a quite strong candle if we go out to the 1 hour on the euro after. I'll zoom that in a bit better. So obviously we've had some pretty lackluster activity overall. I took a couple of L's last night, then recorrected that later on with these dubs through here. We've then had through Asia a bit of a tick down into early London, another move down. Obviously we had the European data coming out as well. Since then we've pushed up with pretty impulsive candle right there. But I don't have confidence. I don't know what you guys reckon in the continued strength.
No.
I'm kind of looking for some kind of a pullback here. One more tick up, but a failure to make a new high, and then possibly just coming off.
Keep dropping.
Everyone seems to be very much waiting for Jerome Powell's speech on Friday.
Yeah.
Right now, I'm not so sure that the market is actually positioning correctly for that. Right? But this is the price action we're getting right now. So similar deal on the Dixie, we can see we dropped back down, came into this level once again with this old cluster box, ran up, created a double top, pulled back off. And similar deal here, if we drop down from the 1 hour, go back to the 15. This is basically something I'm looking at. So for us to pull back up here on the Dixie, just like with the euro, and then pull back down. Because right now we do seem to have a bit more. Yeah, it's. I don't know. We're very mixed across the board, and euro dollar has been moving independently. Same with pound dollar. Same with dollar yen. Then you got indices falling, whilst gold is also falling, and then we got other cross indices like, say, the ASX reached near all-time highs. Today, right? So. We've got very much a disconnection across the board. Now, often you do get that through this sort of European summer type period where there's lower liquidity, less people, less hands on desks, less trading back and forth. But this is definitely a little bit peculiar coming up to the Jackson Hole event, which typically there's a lot of media, speculation and chatter. But as far as markets, often just write it off.
Yeah.
Right. Now, we have had a few changes recently around stuff shuffling around, and you could expect something from Jerome Powell. But given that, I don't think this is the time he's actually going to say anything. More than likely, he'll just leave it flat, want it to be a dead egg, wait for the next, we got inflation data next week.
Yeah.
And then the week after, we got payroll data again to actually establish some kind of idea after the revisions from the previous payroll number. So I don't think he's actually going to say anything this week at all, which the market is positioning as though he's going to come out and say...
He is going to say something, yeah.
No rate cuts, all right? We're neutral, whatever, after the PPI data, but that seems ill-positioned. So we could see a shake-up on that Friday.
What time is that news tomorrow?
Once he does speak.
I've not looked ahead yet.
It's early. I'd have to check what time it is, my time, and then correlate that.
And then our time.
Because exactly. I'm in Australia, right?
Because I know, obviously, because I'm just doing sniper trades and I'm not holding them as long as many people. I just check the news the night before, have a look how that impacted last time that news was released, if there's any other conditions that are going to affect it, etc. If we know something's going to happen, if Trump is going to say something, etc. And that's how I will determine whether or not I'm going to get into a trade. So for me, I check every evening and make sure that I'm set up correctly, and then that helps because sometimes I've just completely stayed out of the market correctly because I've seen that last month when we had the exact same news, we spiked, even though it's a perfect setup. So these days, it took me a while to get to that point where you need to do your pre-checks before you jump in a trade. You can't just jump in them each day blindly because we all know how much news affects everything. And news has caught me short quite a lot.
Yeah, and there's some periods where news is going to matter more, and other times where it's
exactly
by the by. It's going to be a bit more, moderate, that kind of thing. Right now, we're very much in that kind of crux period where you can very much whipsaw one way or the other.
Yeah.
Because there's a lot of variables on the horizons. One with the jobs inflation data in of itself, with the tariffs coming through, whether they're actually going to be passed on by companies or whether they just gradually layer that in, knowing that consumers won't be able to take it up. They won't stomach it. They'll change their purchasing preferences. And so they'll be like, okay, we'll just hold off. We'll eat it for now. And then they'll just gradually increase price as they normally do every single year. And that makes up the difference. So technically they're still neutral. And that's sort of what I'm seeing right now. Then you got the jobs picture. Then you got Trump coming into the sphere as well. There's so many moving parts right now.
No.
Yeah.
There is. Are you looking at anything else at the moment this morning, or are you just looking at EU?
So that's what I had earlier. There's also Aussie dollar as well.
So that's one
which we have
that I never look at.
Yeah, we've been absolutely beat up the past couple of days. Part induced by some of the risk-off moves from the NASDAQ and the indices in the US falling in general. We also did have the RBNZ, so that's Reserve Bank of New Zealand, come out and basically leave rates flat, but they, in the commentary, signaled a bit of dovish side commentary, right? So Aussie dollar and New Zealand dollar, obviously we're very close neighbors. They move very much in tandem. So we've got beat down, beat down, beat down, beat down, beat down, and it's just been a sustained move the whole way, right? So from here, I am looking for a bit of a pickup.
Yeah,
this seems a bit overdone. We've
come
down to these prior levels, right? And we've slightly overshot them today. So we're getting that come to the equal level, slight overshoot, recover. We were in a decent point of recovery earlier from this standpoint. And it gets stopped out on there. I end up taking a new long position after this came up and then came back down in here. And I've taken that guy now.
Okay.
Yeah. So we basically pulled back. Yeah. This was when the euro dollar, pound dollar collapsed through here. But obviously Aussie dollar's held up much better since. It's already had that, drawdown. It's been one of the most laggards on the day. So I don't really like the further upside for euro dollar or pound dollar. I prefer it on the Aussie dollar.
Right. Okay.
Instead, just given the technical structure, how much beat down we've already had, potential for US stocks to recover. If you look at the ASX, right, this is kind of the price action we've had recently, despite the US indices dipping. The Australian stock market has been ripping.
Yeah.
Which is peculiar because normally for those kind of inflows, you normally see foreign currency buying as well coming in and foreign players coming in, which then elevates the Aussie dollar, right? And then hence you would typically see a bit more of a bid into the Aussie dollar when the ASX, so the Australian stock market, actually outperforms the US market. Because every single day normally you get like a follow through of whatever happened in the US happens the next day on the Aussie market.
Okay.
But we've had the opposite. So it's very strange to see the currency also coming down at the same time. But like I was saying earlier, we seem to have a whole bunch of, fluctuations and stuff going
It's
on
not
across the board.
the charts
very
are not their
disjointed.
usual self at the moment.
Yeah.
I don't know if you looked at GU this morning. GU was very nice and clean.
Yeah, GU. So very, very similar to the sort of euro dollar move when we did have that pickup before. So we did get, we've had a variance of, euro data and stuff going through, plus some pound data. This is running on very nicely. So definitely as far as the structure over the euro, I can definitely see this running on, breaking these highs just here and actually coming up to this high point much better than euro dollar. Euro dollar seems very, it just seems like it's confused. Like euro dollar feels like it has like a concussion. And it's kind of walking around and wobbling, doesn't really know where it is. It's like,
it's on its summer holidays, it's allowed.
Is this my left hand or is this my left hand? What's going on, right?
Yeah,
so
the
I think
isn't moving its usual way.
Yeah, so I think if I had a preference as far as the major dollar crosses, pound dollar and Aussie dollar would be my favorites. We got dollar yen here as well. This has also been a little bit confusing throughout the week. We've seen a lot of dollar yen selling at the same time as euro dollar, pound dollar, Aussie dollar, New Zealand dollar, all the other majors also selling off. Same with the CAD. And that's been in the face of, the general drivers. So we have had some risk off tenants with that. And then hence you could argue that's the reason for piling into the pound. Hence the other majors, you shift into the dollar. At the same time, though, we've had gold come off. And then we've also had dollar franc rising. Right? Bit weird. So whether the dollar franc component is due to the Swiss National Bank coming in, they've signaled they want to come into the market and influence that. So that might be finally them doing that on the back of the tariff hikes and seeing weakness in the currency to actually get some kind of impact. Final one being gold. Gold sucks, guys. Gold sucks. I know a lot of you guys love gold right now.
Gold. I know a lot of people in the comment section have asked for a comment on gold.
Well, I think gold looks pretty good for long though. I'll share with you guys what I'm looking at after your analysis.
That's your general semi macro fundamental mixed in with text update in a couple of minutes. So there you go.
Right? Did you didn't cover gold, did you?
Where's your chart?
My chart coming up shortly. I'm scanning. Where is my chart? Oh, here it is. I'm on a laptop here, and I have tried to screens here, trying to set up with the laptop, and it's running very, very slowly here. But I got two scenarios on gold. Let me just see if I can log into the new MetaTrader account here. I opened a new account, a high stakes account. I started trading that. Was it last week or this week? I can't remember. And
yeah.
So I started looking at going more into. Sorry, what?
Is it up?
No,
are we profitable or?
Yeah, it's every single trade so far is a winner, so it's good. 100% win rate. Up, not too much.
Do you both trade like a specific currency on a specific account, or would you trade the same different currencies on one account? So, like, I know for me, I'll trade NAS on one funded account. I'll trade GU on a different. I'll trade something else on my personal. I never mix currencies on an account.
Okay, why? I have like 40 currencies I'm watching, so that would be probably.
So I only do like 3 or 4. So for me, I keep it small. Otherwise, I think my head would burst.
All right, that's interesting. But so what's the reasoning behind dividing it up like that?
I think it just helps my head. So for example, I have certain rules where I think because I scalp rather than keeping a trade long like the pair of you two, I can, like this morning on NAS, I can do 2 trades and then I stop. So once that account stops, I'll lock it out and I'm done. And then I'm looking for setups throughout the whole day. I'll set up alerts and for GU. I think because, like I've said, I still have the day job, I find it quite difficult to look at quite a lot of charts. So I just have to set up alerts throughout the day. So yeah, I try and keep my accounts separate. So once I'm done with one, that's done. I don't need to think about that. And it just helps me differentiate, especially if it helps with, like we've said, I'm quite emotional. So if I've had a loss like I have on NAS today, and then I'll get my win on G, I can separate that. Whereas if it was on the same account and I had 3 losses on 3 different currencies, I don't think emotionally that would help me.
Right.
No, I think that makes sense though, entirely. Like, I will typically segregate it by strategy rather than like currency pair or
yeah, I
other
get that.
asset pairs,
Sometimes
right?
I will trade this different currencies if it's the exact same structure.
Yeah.
But yeah, so for me, it's different strategies. But because I only trade
Yeah.
a handful of currencies, it works out that way as well.
Yeah, and then it also depends for me, like if I see, because I might sometimes see the same somewhat setup on a cross correlated, like high correlation
Yeah,
pair, where I'm already in one pair. I can
yeah,
see the same setup on another pair, but they're very correlated. So you're essentially doubling up the risk.
yeah,
So at that
exactly.
point, I'll avoid that pair, but I might take some kind of other form of like a swing trade or something else on that
Yeah,
pair,
no, I get that.
just with right on a different account, just so you don't totally lever up. But
Yeah,
I do also see that obviously when you're seeing it across multiple pairs, you also gives you more confidence to the original
100%.
input that you had. Because but yeah, I typically do it by
Strategy.
the strategy rather
Yeah.
than the pair per se. But I have like 4 core pairs, 4 secondary pairs, and then sort of 4 very tangential,
So just a handful then.
opportunistic, opportunistic pairs. I don't have 40 like Johnson because
Yeah, I couldn't do
he's a
it.
madman.
My head can just cope with the 3 or 4 that I look
Dude,
at.
Johnson's crazy, man. He's all over it. He's all over it.
So let me
that's
let me
too
let me
much
show
for
you
that.
actually what I do. It's actually quite simple. So I got the list here. This is the main list right here.
Yep.
40
And
simple, bro. It's
uh
40 simple.
Simple, LJ, simple.
no, but it is simple though. It is simple. So I got all the the crosses, the majors and the minors and the crosses
Yeah.
between them, and then we got the US indices, got Dixie, the European indices, the commodities. We got the yield spread, and I'm started adding some futures here as well to get accurate volume data, and then we got a couple of crypto pairs. So what I do is once a week, right? I start with the first one, and so here's USD CHF. If I see something that might be interesting, I'm just gonna hold Alt plus Enter, which will add that to my green list, and then go on to the next one and the next one and the next one until I have a green list basically. So this one here, for example, when I
Okay.
did the market scan on Euro CHF, it was not really that interesting. It is interesting now though. So if I would be doing the weekly scan now, I would be adding that to the green list. Then I have the green list, and what I do then is I separate the green list with a little separation thing here on TradingView, and the ones where I start with the daily, with daily and the weekly, then I go to the green list, I go down to like the 4 hour, and I start looking for setups in the 4 hour. If I find something interesting, I move it in the top of the list, and then this is the list that I'm watching throughout the week. So I'm not going through 40 pairs every day. I'm just so this is the pairs that I will be focusing on
All right.
throughout the week.
Okay.
And then daily, I go through this list to see, okay, which are the most interesting ones today. And then I separate it with the most interesting at the top for the day, and the other ones at the bottom might be interesting tomorrow. So I include that in tomorrow's scan. It takes, weekly, maybe 30 minutes to an hour. So it's not, when you get a routine and a process for it, it's not really that difficult.
And most of your trades are more longer term,
Yeah.
right, as well. So hence,
Well,
it's not like you have to be in the market right away, that kind of stuff, right? Like
actually,
Ashley's very
Oh
much
man,
more
a couple of
sort of
seconds can make all the
scalping per se.
difference. Yeah.
Yeah,
yeah, but
and I've got a variance between the lot, so I don't know.
I think now this time, as beginning of the year, I kind of stopped being more active in the markets. But I feel like I want to try it again. You know, I've set up an algo trading system now for about
Okay.
6 months to a year. I've worked on this algorithmic trading business or portfolio management thing, and it's now started to generate some profits. And I see that it's working, it's profitable. So I feel like I can now let that one running automatically and go back and kind of focus more on active trading. And what I want to do here is I want to still have the swing trading mindset where I'm scanning the higher time frames, but I want to go down to the lower time frames to see if I can find entries on what would be swing trades, but have tighter stop losses and exit it a bit earlier. So I can show an example of that. We got gold here, for example. So on the daily, yeah, no worries.
My cat's being ridiculous.
Yeah, well, that's a dog I hear.
That's my dog. I've shut the blinds in the living room. I've shut the door, and I thought I'd give him treats, and I was like, he won't move for an hour, and all he's done is bark.
It's funny. I hear a dog, and he's like, "My cat's going."
I know. I thought that,
like,
unless my
okay,
dog is
weird.
affecting his cat.
Okay, so let's look at gold here. We have this big trend line right here. We've seen the price has been respecting this trend line nicely. Now we're in a situation where gold is definitely quite messy because there's a lot of different things you can. Let's remove the volumes here. There's a lot of different things you can say about the direction of gold and the trend here. But one thing we can say is we got that trend line here.
Yeah.
And this trend line in combination with that resistance above here kind of creates a sort of ascending triangle type of pattern. But then we have broken below that trend line now. And we're actually, and if you watch, that could have been the break of the trend line where we broke below, and then we're coming up again and we're retesting the mid zone of that trend line, which could tell us that it's a bearish retest of that trend line that has been acting as support since February, basically beginning of this year. So that's somewhat of a bearish development, and you also have right here you have the middle of the range of this bigger range acting as resistance. So that kind of adds to the idea that could potentially be a bearish retest of that area. But then if you also look at this candle, that is a very strong bullish engulfing candle.
Yeah, 100%.
On the retest of this 0.618 or the real-up zone area. So the bigger picture tells us that gold could be ranging. I mean, it is ranging, but it could be ranging with either bullish or bearish characteristics, depending on how you view that retest. But then you add the local structure, it adds to the bullish narrative of gold printing a bullish engulfing candle on the real-up zone, and then now it's retesting what I believe is the descending trend line of a falling wedge here. So if we go into the lower time frames, we see that on the 4-hour, we have broken above the descending trend line of this wedge. We're retesting that. This is a retest of that trend line right now. And we could be viewing this as a reclaim of the range EQ area. So the question is, are you bullish enough on gold to look at this as a bullish signal, or are you thinking that this range has bearish characteristics? And you look at the break and retest of the trend line. Basically, I think gold is in a scenario now where a lot of people will be bullish and a lot of people will be bearish. So we're probably going to see a lot of position around this area because there's a lot of technical reasons to go long, and there's a lot of technical reasons to go short, and there's also a lot of fundamental reasons to be cautious on the direction of gold.
And also, cautious and short. And this is what I was saying to Mike in ABL when we were talking earlier. Both the fundamental aspect, you have both sides playing out pretty evenly, 50-50. The techs are also playing out very evenly, 50-50. And we seem to be getting very much that, where we're in this kind of range, and you sort of play through just like what you marked out with that wedge. You get a break of that, and then people just pile into it, right? And then, like, we had a channel yesterday. We were riding the channel for London, came into early New York, broke out that channel, and then collapsed. Came into early Asia today. We've gone to the extremes. People buy it up. And right now, it seems to be, just like you're saying, very 50-50 either side. And so hence, I think the best way to play it is exactly that, purely technical on those breaks, and view it as 50-50 and just see what the price action is and level into that. Don't try and like pre-guess where we're going, either up or down, because you can see both sides very easy.
So I actually think there's
100% agree.
Yeah, I think there is actually a reason to go long here, because we do have, we have some we have bullish momentum coming in the lower time frames. Basically, we can even go like I'm not supposed to go lower than 50-minute, because I know that if I go lower than a 50-minute, I'll start getting all these ideas, all these impulsive ideas of like, I get to enter now, I get to enter here, I get to enter based on 1 minute. But if we go into the lower time frames just to see the structure, because what we're seeing here on the 15-minute is obviously, uptrend, breakup trend, downtrend, and now we have the beginning of a break of the trend as well. So you can see how we have a swing high area, and then I guess sort of a swing high area here, local highs, higher low. So there is a break in structure in the making here on gold, and you can see it probably quite clearly on the 1 minute with the you can definitely view this as the range at the top of the previous trend. Price comes down, and then it forms sort of got that trend, and then it broke out, retested that level, and then you add to that, the daily bullish engulfing candle, the break and retest of the ascending triangle that you had right here. So to me, I'm watching this and I'm thinking, I probably want to go long on this for a probably 1-to-1 risk to reward, where I would view this current structure that we're printing as a lower high, and then I will be looking at a 1-to-1 risk to reward. I think I'm a bit too late on this one though, because I would.
Yeah, I was going to say, I can see that, but I think where we are now is probably a touch too late as far as the other businesses. Also, what is this, Jonatan? Are you getting into astrology now?
That's right. Oh, I have a. Well, let me get that set up, because I'm working on a strategy.
What is that?
Okay, what is
wait, what?
Good question. This is a good. Yeah, I am. This is a good question. So let's go into indicators right here.
Also, first of all, Zix, I'll just tell you now, it's because Mike and I are in a long distance relationship. All right. He lives in Poland. I live in Australia. It's very heartbreaking. We can't always see each other, but wherever we can, show a little bit of love. That's what we do. So there you go.
Right. Okay. So I'm working.
Show us these moon phases. What is this about, bro?
Let me see.
I assume this came from something, right?
I'm very intrigued.
It does. Let me see. Okay.
What is it? What is it?
Okay. Here we go.
Even my dog's intrigued.
So now, well, hello there. So Victor.
Wait, what?
Victor had a great idea of saying, like, so we talked about moon phases, and he said it's so moon, lunar, and then he called it lunatic phases. I'm like, okay, I'm gonna create a strategy called lunatic phases based on the moon phases, right? Now it's not.
Wait, hang on. Before you continue, are you telling me you've created a bot, a strategy
on the moon
based on moon phases?
Yeah, well, I'm working on it. It's not complete, but I'm working on it. Okay.
What have I joined?
If we look at the moon phases here now, what I'm trying to create a strategy on this. So The gray ones are full moons, and the blue ones are new moons. And as you can see, there is a very clear pattern of most markets bottoming around a full moon and topping out at a new moon. You can see very clearly just the timing. Now there is a disconnect here because the full moons are designed to be printed below the candle and the new moons above the candle. But you can clearly see that there is some edge in here where you have that very low right here is a full moon. This low is a full moon. That low is a full moon. That low is a full moon. This one, like there's it's insane, right? So I'm then going to I'm working on a strategy where basically I'm just going to buy every full moon and sell every new moon and see what this.
Okay. Wait. So this is an actual thing based on like chart patterns and stuff.
Yeah, dude. Like
I thought we were talking about actually.
Nod your head and agree.
Yeah, like the actual like moon cycle. Like okay, this is at least a bit better because I was like, hang on, guys, like what are we doing here? We're walking outside, be like, oh, half moon, full moon, no moon. What are we doing?
No, so actually, this is
dude. You had me for a minute. I was about to say like, I gotta walk outside. You know what? Is it raining today? Is it sunny? Like, how big is the? You know, come on.
But actually, this is actually a part of technical analysis that is I wouldn't say it's I guess I wouldn't say it's a respectable way of doing TA. It's not like the normal way of doing TA. But in the CMT curriculum, there is a like a whole chapter to seasonality, right? And there's a lot of different seasonality where you can find the patterns in the market. And one of those are the moon phases, and you can also see like planetary alignments. It's actually proven to be.
Wait! We just deviated. Wait.
How did we deviate? How is the moon different from planetary alignment?
I thought this moon was based off the charts, right? Or are we actually talking about the moon?
This is the actual full moon. This is the actual date of full moon.
When there's an actual full moon.
Yeah. When there's an actual full moon, some markets tend to bottom.
Okay. All right.
This is your monster brain does not you know it can't.
LJ is onto something here.
What star sign are you, Jonatan? When are you born?
I don't know what's called in English, but it's the one with the bow and arrow.
The bow and arrow?
I don't know any of them. So
1 minute.
If someone knows that, what's the bow and arrow one? I know. I do know. I'm pretty sure I'm Aries.
Sagittarius. It says.
Yeah, so you're Sagittarius, Jonatan.
Yeah, bow and arrow Sagittarius.
Now that's different, though. We can't be trading based on like that. We're talking like astrology is, probably not very profitable in trading. But astronomy, there is, there's a difference between astrology and astronomy, isn't it?
Yeah, we got it. Okay, how much profit do we make if Elon makes it to Mars? That's why I need to know. I feel like that.
I guess it depends on what you're investing in.
This is the bingo answer. If we're talking about the planetary, the solar system, and right? I feel like that's the main answer. I feel like that's a goal we can reach. And what date, Jonatan, do I pile into Tesla or SpaceX goes public?
I can't tell if you're trying to be funny, if you're actually serious here.
I think it's the monsters talking at this point.
That's the monster talking.
No, come on.
Let's move on from the moon phases and the astrology.
I was having a laugh. All right, guys, calm down. Yeah. I'm having a Jesus.
Is there any questions that we need to go back to?
I will get back to this and I'll show you a profitable strategy based on this.
All right, tell me when to buy a Tesla, Jonatan. Thank you.
Well, Tesla is probably already be in.
I'm pretty sure if I did that yesterday, I would have got destroyed. Tesla got ruined. Nvidia, all the major tech stocks got absolutely battered yesterday.
Yeah, it doesn't look.
Facebook, Amazon, everything. Anyway, continue. My
All right,
apologies
let's do my
for
quick little market
disrupting
scan here. Then I'll
your
do
flow.
the giveaway winner of yesterday's giveaway. Of course, we have a giveaway running now as well, so you can go into the pinned comment section and check that one out. Okay, so gold. We basically said on gold there is I said that there's possibility of moving higher, but I think my entry is gone. Looking at Euro AD, we have a very strong trend on Euro AD. Broke above this level right here. So we have a nice breakout on the daily. We have a confirmed breakout on the daily. Let's see if I can move at the volume here. Now, something I'm working on here is trying to figure out the volume analysis across different Forex brokers, because they're using tick volume, and I want to be able to see the real volume. So I'm trying to work out an indicator where it's gonna if the either I'll take the volume for the futures market, um, and I'll try to apply the futures market when it's available to the current chart that I'm watching, or I'll see if I can
I
hold
would
on.
tell you your best bet is take the futures and then aggregate it against ECN brokers.
Yeah.
So like your IC markets, Pepperstone, interactive brokers, that kind of stuff. And then cross compare it with the futures. That'll be your best bet to get an actual real picture of volume.
Exactly, because if we're looking at volume here for Euro AD, price action is not confirmed by volume. So what you want to see on a breakout like this is you want to see. So first of all, in this trend that you had here to the upside, you see that volume is confirming this trend. We have an increase in volume on the move to the upside. It's also confirming kind of the accumulation here with ranging volume basically, and then we have a breakout here, but we actually have decreasing volume on the breakout. So if you take from here to here, you can add a
Would you consider though that like obviously we're in that European summer type situation, so you do get that decrease in volume, right? And then because of the less volume, you get extended moves that otherwise in typical conditions would not move as far as they have, because that goes back to the seasonality thing that you were talking about before. And over my 10 years, this period always is very random. There's always a large mix of inputs, and you get this disconnection across the whole market.
Yeah, but it's still relative. You can still look at the volume on the breakout relative to the volume during the summer period. So let's say from May till now. Let's just say that May till end of August. That's could be the summer period for Europe, right? So you look at this volume, and yeah, sure, you might have lower volume during this period than other periods, which according to the tick chart, you don't really see that on the volume here, which is probably because it's based on the tick chart. But if we look at the real volume, then probably you would see that volume is lower. But you can then look at the breakout and look at the volume increase on the breakout and compare it to the overall volume for that period, right? Because on a breakout, people are still trading that market, and the people that are trading that market should be excited about that breakout. And if they're not, if we don't see increased volume, there is a chance that breakout is not confirmed by volume. It doesn't work all the time, and of course this is tick volume, so we can't really take it as real volume, but it's definitely something to be a bit cautious of. So when I'm seeing something like this where volume is not confirming price on a breakout, I'm a little bit cautious that this might not be a real breakout, because
I would say the final piece, sorry for interrupting again, but final piece, I would say add the COT data, so commitment of traders data, to the other two pieces. So you get the tick volume from the ECN high frequency type brokers, get the futures, and then add the COT data as well. Then you can build a better overall picture, because you'll see because often you get both the buy and the sell side dropping massively purely off of that drop in liquidity and volume.
But what about the lag on the
differentiate?
For those of you watching, COT is the Commitment of Traders report. It's it's a report coming out from the FCA or CFTC or something. CFTC, I think it is, right? And
CFTC, yeah.
It's not a survey, but all the big if you're trading a certain volume in the US, if you're managing a certain amount of money, you are
It's all
required.
the big daddies,
Yeah,
basically.
the big institutions, the big trader, they are required to report their positions to the CFTC every Tuesday, I believe, and then that
And then
report is released on Friday.
yeah, and then the retail side does come through as well, because the retail side is traded through a larger entity, so the
Yeah.
main brokers, and then hence that's how that transfers through, that you can actually get real broker data across the broad spectrum, and that's why you got to add that as the third tier.
The issue I'm having with COT is the lag. Okay, so you get the numbers on Friday. Okay, I'm not going to be able to trade those on Friday most likely, but I will incorporate that data into my weekend market scan. So I'm scanning the markets on a Sunday, and I know that the data I'm watching is from Tuesday last week. And if I'm then trading, let's say on the 1 hour or the 15 minutes, I'm trading based on data maybe on Monday that is almost 1 week old. And whatever has happened over the weekend is massive, has a potential to massively change the positions of those reported on Tuesday. So
Sure.
there's a lag where I feel like long-term position trading, where you're looking at the daily and maybe the weekly, and you're thinking about rebalancing your portfolio. I think the commitment traders report is amazing, because there's only a week lag, which is not a huge difference, because maybe you're trading based on weekly closes or something like that, or you're position trading for the next 2 or 3 years. But I'm having, I'm struggling understanding how I can incorporate the COT into the lower time frames.
I would tell you this. So, like you were talking about before, the more high frequency stuff with the tick data and the futures data and the volume profiles, that kind of stuff, that's going to be your slightly high frequency component, and you got to cross compare that with that COT data, see if that matches up with the lagged component, and not just whether it matches up in a general linear sense, the standard deviation of how much they're varying within that, right? So sometimes it'll be one standard div where they're pretty close and you expect the COT data has a lag. So it's one standard div, it's probably playing catch up. When you see it having wider than that, you can see that there's a forward variance coming through, right? So this is where sometimes as well you have to aggregate this into like an actual equation, put into math, put into Excel to get a proper picture. But even if you just eyeball it and just look at the graphs that are played out, you should be able to put that together. And that goes for any guys in chat. If you want to look at that stuff, the three together.
It's super important to know these kind of things. I know, for example, when I'm studying CMT, they're talking about exactly this. They're breaking down the COT and which part of the COT's commitment trader support you should be focused on, and then they're actually talking about how you can look at the volume and compare it. But one of the major issues is the timing aspect. But you can always there's different ways, and different people have different ways of analyzing that. So that's definitely possible to create quite a profitable strategy only around that. I'm looking at Euro AD here, and as I said, the breakout here on the daily, it's definitely an interesting breakout. But what I'm interested in is the behavior of price action when it's retesting the breakout area. So looking at the 4 hour, we have a somewhat of a, and this is going to be the general area where I want to see a bottom formation. So if I can see a bottom formation here on the hourly or the 4 hour, this is going to be very interesting for me to trade. If we're looking at the 1 hour right here, I'm viewing this as, we got a very nice trend to the upside here, and then we have a potential distribution range. I want to see a breakdown, come down here, and then form something like that. This would be a perfect entry for for me on Euro AD. So I'm not really interested in trading this right now, but I will put an alert right on that level to alert me when I'm approaching that area of interest. So now that I have alert on here on TradingView, below price, I'm going to put one above here as well. And then I'll move this down to the list below, because I know that if either of these alerts goes off, I'm not going to be interested in trading this. So if we go to GBP CHF, this is GBP NCD. This is similar, and unfortunately, or did I trade this? I can't remember. No, I missed that entry down here, unfortunately. And then we had this massive move right here. So the question now is, I don't know. I just need price to come lower, basically. So I'm just going to put an alert here, and one perhaps above here on a breakout, and then we'll move this one down again. Just trying to see, can we find a setup like today live on stream here. So GBP CHF, obviously we had the idea of shorting this. Wanted to see a break up that level down to this level, which pretty much played out, but obviously as I was not trading yesterday, didn't get a chance to enter that, and also we had no retest of that area. This was just a straight break straight down to the level. So now I'm looking at GBP CHF and I'm thinking, if we zoom out, if the trend isn't overly bearish, this might be a high time frame range or something. We could perhaps buy support here. And what we're seeing on GBP CHF is we're seeing this level has been tested and it has not been broken. We haven't been trading below this level since around September 2022. So chances are we're not going to trade below that level for quite some time. Mm-hmm. So if we're adding a fib here, see that probably hit the 50%, right? So we got the 50% here. So perfect hit of the 50%. We could probably say that this area was retested. So that's a retest of the 50. Yeah. Now what I would be doing is I would be looking at this for potential move back up to the level that broke, which could be that level right here, and then we want to make sure we can front run that a little bit.
I think we go higher, even. To be honest.
Yeah, but
reason I will tell you, Jonatan, as far as the macro type portion, the Swiss National Bank has voiced a number of times in the past weeks that they want to get into the market because the Swiss has been appreciating against every single currency way too hard, way too strong for way too long. Right? They've gone right down to zero rates once again, trying to get that influence. Now, on the back of the Trump increase in tariffs against the Swiss, up to that 39%, and for you guys that don't know, almost 50% of their economy, their exports, everything, are straight from exports. So that 39% hits 50% of their economy, right? So they're trying to layer in the back of that. And then they're very active in the market. They're one of the biggest, I guess, put it this way, sovereign wealth funds as well, right? They're not just dipping in and out. They're very active traders, right? So we've seen that, and you can see this reflected in recently the dollar-yen price action per any of the dollar-franc or other franc pairs this week, where every time we've dipped, we've gotten a bid and we're being pushed up, right? So I would say very much you've got the Swiss National Bank on your side for that to come up.
I just entered this position right here. So what I'm seeing here is, and I completely agree with you, right? But I'm making sure that I'm trading from a, your fundamental analysis definitely adds to this idea, which I'm happy about, but I think I'm just going to take this as because I see a very clear technical pattern here now.
Yeah, definitely. I'm just saying it gives further addition to that, right?
Yeah.
I'm going to let you two argue this out, and I'm going to drop off because it's 1:30.
All right, Ashley. Thank you for
thank you, Ashley.
The day job. I've had about 4 missed calls.
That's right. Thank you so much. Lovely to see you again.
I'll speak to you again. I'll speak to you, Jonathan, in regards to next week.
Yeah, definitely.
Sure.
Definitely do that.
All right.
See you next time, Ashley.
See you later. Bye.
All right, see you, Ashley.
Ciao.
Right. So what I'm watching here is, you see how, this is the breakdown area. On the 1 hour, we can see that this is where the where we broke. But if you look at the 15 minutes, price really accelerated. I mean, it paused here, but it really accelerated when that level was broken. So for me to be able to get a 1-to-1 risk to reward ratio in on this, to me is a given, because now also we talked about volume, right? Look at volume. We got a nice uptrend. We broke above this level. So basically, what I'm watching is this is pure momentum from this level to this level. I see this as just prices just falling, free fall. So I want to make sure that I view that as a gap. It's not a technical gap where there's no price, but I view this as a maybe you could call it an imbalance or something like that. There's obviously an imbalance between supply and demand, and price is now trying to, as always, price is a discounting machine. It's trying to find that equilibrium, right? And I feel like this level is acting as that equilibrium magnet, if you will. People are most likely going to try to push price higher. So we have an uptrend. We have an uptrend in volume. We have increasing volume. But I'm going to be honest, like people watching here, this is tick volume, and I'm not even sure because I haven't done the proper research on this yet. There's so many things I want to research, and I haven't gotten to tick volume yet, right? But can you even use tick volume in trading? And from my experience, it does seem like it's doable, but it feels weird because it's not the real volume. It's just if price goes up 1 tick, it gets added to the bar as a bullish volume, which is not the same thing.
But I mean, FX, you're never going to get pure tick volume ever.
I mean,
no
pure volume.
How you pure volume in general. That's why FX markets have like 25 to 35% of bots, right? Yeah. Whereas these days, about 65 to 75% of stock market trading is bots. As it goes through an exchange, right? You have raw data that can be calculated into that, which spot markets for currencies do not have. So you can only get like a best bet, right? And that's why you have that deviation. But like you said, like that's going to be your best option, just the same way as all the big players already have as well. And you're going to have, the idea that's why you have to get the other portions as well involved. So you have the ECN brokers input, get the futures, get the COT data as like a lagging input with your high frequency inputs, aggregate it, and now you've got an actual picture to actually make a move. So
yeah, I think I am probably. I'm definitely gonna. If I'm gonna do that, I probably need to hire someone to do it for me. But I think it's a really good idea, and I'm actually, okay. So I'm actually gonna. Okay.
Also,
I am going to just make a note on that because that's a great idea. So I got a little to-do list here, and I will write. Let's make sure I remember this.
Answer this for Khalid. Look, man, we've got ABL open for basically another week to the end of the month. You can jump in, see what's there right now. We're going to a bit of a hiatus period, right, into phase 2, rebuilding the platform, that kind of thing. So if you want to jump in there, see what's around, go to alphabetalab.com, right? You'll be able to sign up, get in there, see what's around. We will have some post ABL of the current form bits and pieces, which you'll see over this next week. And you'll probably be able to pick up a lot of that kind of stuff. But yeah, keep an eye out for that. And unfortunately, we're kind of going to phase 2 next week. So, you would have had more time before.
Yeah, but the
But jump in
educational
there,
content is not going to
and
stop here.
we'll.
I mean, with ABL taking that break, definitely we're going to try to, like, for example, we had some comments on your Bollinger Bands and how you're incorporating that into trading. I mean, I would love to just put you on a slot for a live stream where you're just covering that. So we're working on a lot of new things here with the live stream, guys. We're going to expand it several hours every day. We're looking at going live on Fridays, and we're looking at setting up sections in the live stream where we're going to have specific section that is educational, where every host has a specific way of trading, and we're going to try to, in a live way, break down those trading strategies. So for those of you looking for education, there's definitely going to be more of that. For those of you looking for live trading, we're trying to build a live stream here where we're going to basically try to mostly do live trading. But for those of you who want education, you'll know when to tune in and what days to tune in to get that educational content as well. And you're gonna be seeing much more of LJ going forward here as well. So yeah, any questions that you have on his trading system, just let us know in the comments.
Especially when I have a bit more sleep. That'll be good.
Yeah.
There we go. So.
Yeah. Okay, so we had a comment as well saying that Kelly.
Also, no. I was just going to say, you still have to, after this, you got to explain the moon phases trading thing, because you didn't quite get through that. I still want to know what this was, to be honest.
Okay, so moon phases. Yeah, I'll definitely. Okay, so I was just going to answer this saying we don't complicate trading. Then in the other sentence, I talked about moon phases, but but I actually think that, first of all, I would be interested to know which part of my trading you think is complicated. Maybe it was the idea of looking at volume and commitment of traders reports. So first of all, you can trade in a very simple way where you look at price action and you're just going to buy, I'm just going to buy the break and retest of this level if there's a bullish engulfing candle. That's it. But if you think you're going to be profitable in trading for more than a year or more than 2 years, you have to think about making your system advanced enough to go through different cycles, different market phases, different parts of the business cycle, different seasonality patterns, and the crises like the global financial crisis, the pandemic, things like that. So yeah, you'll probably need to be a little bit more detailed, a little bit more advanced than something simple like that. But I think my way of trading is actually not very complicated at all. Like I showed you the market scanning phase. Go through the markets, pick the ones I like. Is it in the trend on the daily time frame? Okay, I want to trade that on lower time frames. Look for a break and retest. Look at volume. Look at a few indicators that might confirm my idea or not confirm the idea, and take the trade based on that. It's really not that complicated. I mean, it might look complicated because some people are just not trading differently, and we're all wired differently, so we might look at that and say, okay, this doesn't make any sense to me, therefore it is complicated. I mean, I'm looking at you, LG, I'm looking at the way you're trading, and to me that's super complicated. You're talking about this all fundamentals, and you're looking at technicals, and to me that's super complicated, but to you it's probably simple.
Yeah, and then beyond that, you can also include like options, and if any of you guys that have even tried to dabble or try to learn or anything about.
Wow, I'm reading about options in CMT2 now.
Try and include all of the Greeks, and you'll just be like math out the wazoo, right?
Yeah,
so
I feel
that was one of the earliest things that I started with when I started trading was options, because I was studying physics, right? So that math stuff was like, okay, this is cool. So if you think this is complicated, believe me, you can get way, 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 way more complicated in actual hard math, actuarial math.
So
and that
right
is more
now,
complicated for sure.
Yeah, so right now I'm studying
simple by comparison.
Yeah, no definitely. I'm right now studying different ways of using options to manage a buy and hold strategy on the S&P 500. and also looking at how you can. So the VIX, for example, is not tradable, but you can trade the VIX using trade the volatility on the VIX using options, and then by doing so, you can also build a risk management strategy for a buy and hold strategy on the S&P 500. So, and the idea here is to minimize the drawdown while not affecting the profits too much. And like that stuff to me is I don't know what I'm reading. Like I have no idea what I'm reading. So that's gonna take a while for me to understand. Now that is complicated. I mean, we have Dirk on at the live stream. Sometimes he's on vacation now, but
Dirk would understand this stuff as well. Yeah, we've talked a lot about this. Yeah, we're on very much the same wavelength. But yeah, I will say this, Jonatan. When you do figure it out,
will it make you any money? Yeah, of course. Like, why would it be complicated? Like, why complicated if it's not making you any money? That's a good comment though. Like, it's a good comment because a lot of people, they add all of these indicators and all of these things, and then the bottom line is, are they helping profitability or not? And what we're doing,
it depends on. It's very. There's a part that is subjective. Would you not agree as well?
Of course.
Yeah. Right.
Yeah.
Because the same way that some people just hate math off the bat. Doesn't matter what it is, even the most basic.
That's me. I don't like math. I don't hate it.
Yeah, exactly. Yeah. But then for someone trying to build, I don't know, something complex, that's not overcomplicated. That's just what is needed, right? So there's certain differences, and whether it lends to your, like you were saying, Jonatan, if you hate it, then don't do it. But if it is, if it resonates with you, then do it, right? So the same thing. If you hate macro, you hate fundamentals, you can't be bothered with it. Just do techs, right? Do technicals. That's fine. Now, you might be missing some of the picture, but you can still build a very good portfolio, a very good strategy without all of that. You don't need to do everything all at once, all the time. It's fine having a $1 million business or a multi-million-dollar business. You don't have to be like a billionaire, as an example, right? I mean, that's cool, but if you did in between, like, that's fine. Just as a gross example, right? Because 1, 2, 3, 4, 5 M is nothing compared to like Jeff Bezos or Elon Musk.
So this is an interesting comment from Arl. Yeah. We got an interesting comment here from Andy B, our good friend Andy B, saying all of this is to trade one lot size, but like. I mean,
who's trading one lot size?
You're putting in the work, the technicals, the things that you need to be trading, and then it doesn't really matter what account size you have, right? If you have a valuation account or a funded account that is small one, and you need to trade one lot size to manage your risk, I mean, it doesn't matter. But what I'm saying is, you're not supposed to be adding more things to your system unless they're helping you with profitability.
Yeah, and one lot size completely depends like where you live, because depending on your relative income for that country, when you need to get by week to week with rent or a home or living expenses, that kind of stuff, it's going to completely vary, right?
Yeah,
I can tell you right now, I'm not trading one lot size at all. Australia, very high taxes, all that kind of stuff, no shot. Right, but somewhere else, like that might be very comfortable and you'll be doing very well. Right, so you can't cross compare that kind of stuff just without relative data, right? In what you're comparing.
Okay, so we got a good question here asking about my EAs. So the way I come up with the ideas of the EAs is 2 ways. First, I come up with ideas. So I have basic ideas. So for example, one idea that I have could be, okay, I want to I want to sell your USD whenever it hits 3 times daily ATR, and I want to have a stop loss that is 10 pips and a TP that is 20 pips. So as soon as it hits daily 3 times ATR, it's going to sell the 10 pip stop loss and a 20 pip TP. I take that information and I put it into a software that is using machine learning, and it's running many different variations of those ideas. So I say, for example, okay, so instead of just looking at the 3 times ATR, look at anything between 0.5 times ATR to
what? Is that the moon phase that's got you? Has the moon changed?
Can you still hear
me?
Yeah,
I can still hear you. Yeah, of course. Okay. Yeah.
Something happened there. Okay, so I put that into a machine learning software that is running a different version of this idea. So right now, I got it running on multiple different strategies, but it's testing for each of these strategies. It's testing about 3 million different variants of that idea. And then out of those 3 million different variants, it could be 1 million up to 10 millions, right? Then it's giving me a list of strategies that is profitable based on some characteristics that I have found. Okay, so that's the first stage. It gives me about 5,000 different strategies where it's profitable back testing all of price action for that pair. So it could be 25 to 30 years of worth of price action on that Forex pair. Gives me a list, 5,000 strategies. Those 5,000 strategies, I then back test on 2 other markets that are correlated to make sure that this strategy is not only working on your USD, it's also working on GBP USD and AD USD, for example. It gives me a list that usually it's going to be like 1,000 for that. Then I run those 1,000 strategies through a Monte Carlo simulation. And I want to make sure that out of I think it's 100 simulations with different variants of those strategies. So run it through Monte Carlo testing, and I want to make sure that all of those 100 simulations using Monte Carlo is going to follow a specific set of profitability criteria. Okay, so then that gives me a list of maybe 100. So we have 3 million strategies, 5,000 of those profitable. Run it through stage 1, get 1,000. Stage 2, Monte Carlo, gives me 100. And then one more stage, the last stage, is walk forward testing. Walk forward testing takes about 2 days to complete for that pair. So it's a long process, but it takes about 2 days for that large, it's not a large language model, but it's a type of machine learning software. Runs it through forward testing, and out of those, I get about somewhere between 5 and 10 strategies that have passed all the filters. So you're starting with 3 million strategies generated, and then you end up with 5 different ones. I take those strategies, convert it into MetaTrader 5 EAs, add it to MetaTrader 5, backtest it for the same period. I cross-reference the backtesting data on the software with MT5, and it gives me about 50% of those are also working in MetaTrader 5. Then what I do is I put it into a live account, which is a evaluation bootcamp account with the The5ers, and I try to see if it works. And also in this process, there is in-sample testing and out-of-sample testing. So let's say, for example, the strategy is tested on 15 years of data on your USD, but it's also tested on data that it has not been created on. So it's been created on 15 years worth of data, but it's then tested on 10 years of data that the system does not know, to make sure that it's profitable in scenarios that it has not been exposed to yet. So yeah, of course it's a lot of steps, and the software that I have for this, I've invested up to 10k USD to only get the software set up and have it coded and have it's not just me working on this. I do have a team of people working on this for me that I've hired freelancer coders and experts at algo trading and things like that. So you're not going to be able to do this on your own. You need a team.
Say, what is the first piece that you're using? But clearly, it's proprietary, right?
Yeah, and I'm not gonna tell you what the name of the strategy is, because I believe that in 5 years or 10 years, this is not going to be profitable anymore, because AI is just going to take everything over.
AI.
Yeah, the question is trading going to work? Is it even going to be doable in the next 5 to 10 years? I know that I wouldn't retire in the next 10 years based on this algo business, right? Because I know that.
Yeah, next 5 years. 5 years, Johnson. 5 years. You got 5 years, mate.
Something like that. But again, like this is not. So Fortune says, what is the first step that I can take? The first step you can take is learn how to trade, get an account with the The5ers, make money, save that money, and then invest in getting people to set up the structure. Okay, because
you got to understand trading first, right? If you're trying to build something greater than that, if you don't understand it yourself, you're going to have no idea getting other people or plugging some stuff in here and there, trying to figure it out. You have to get
it's like
the trading.
We had a question on CMT as well, like how long did I study on CMT? So I bought the CMT1 book for the first time in 2019. Now I wanted to do the CMT test in 2019, but I didn't feel like I had enough knowledge to do it. Now I did it in 2015, so about 5 years later, I felt like I had the knowledge to do the test, and I passed it.
2025, you mean?
What did I say?
You said 2015.
Yeah, 2025.
Yeah. Just so people don't get confused.
Yeah, like I started studying in 4 years after doing the test. No, but
before buying the book. Yeah.
No, so it took me a long time to get to the level of knowledge, and then I studied actively for about 1 year. So for 1 year to studying, and but now for CMT2, I actually started studying CMT2 this month, and the test is in December. So I got about 5 months or so to study for CMT2. And honestly, I'm not sure I'm going to make it, because it's 160 questions, I believe, and it's 4-hour long test. And it's very advanced now that I start to understand that CMT2 it's about the practical applications of it, and it's like the way I have to understand how the option markets work and implied volatility, and how the VIX works, and like it's that is.
Now you got math, brother. Now you got math. That's
exactly. Yeah. And all the different deltas and beta and
delta, gamma, all the stuff I talk about with the NASDAQ options every day. Yeah. It's a pain.
That's complicated.
Absolute pain in the ass.
Yeah. It's like basically CMT2 is set up in a way where it's like, okay, you got this portfolio, right? You got this massive portfolio that is, let's say, a buy and hold of the S&P 500. So now you need to manage this in a way and understand how to risk manage this in a way so you're gonna, outperform the market and outperform hedge funds, and be able to maybe get a job at Morgan Stanley or Bank of America as a portfolio manager. Now, that's not
hedge
easy.
Fund.
Yeah, that is not easy. It requires a lot of different knowledge across a big range of different techniques on how to manage risk across the whole trading space. We're talking about looking at stocks, looking at currencies, looking at
FX, commodities, options, stocks, multiple stocks within emerging markets, Western markets, the majority US, Europe. Every single market, everything is on board, everything is on the table, and that's when it gets really difficult trying to get the cross correlations with everything together. And because you've got such a big portfolio, you get such size, you do have to allocate to the entire cross-border for liquidity type purposes, right? And
exactly.
That's what makes it really hard with that stuff, because it's very high level stuff. We're not talking about basic stuff right? With the CMT, it's very, you're doing it.
Yeah, I mean the
at the top
CMT is
level,
like,
you know.
I remember I went on LinkedIn and I saw that the vice president of Bank of America made a post saying that we're looking for a new, senior market analyst and portfolio manager, and one of the criteria was to have CMT, be a CMT charter holder. And I read that, I'm like, oh, okay, so that's actually,
hey, that's Johnson right now, guys. That's what you're getting. Like Johnson is the big dog right here, man. He's got his CMT one.
Yeah, I got CMT1. I'm not a charter holder yet, but I feel like, okay, so if that's what if that's what's expected of me, yeah, I feel like I'm not there, It's
no, dude, you're 100% part of the way, because that's the, like, you get the, difficult part. Again, you do, like, the first section is hard, right, to a degree, but it's not that hard that once you figure it out, you're like, okay, I understand.
Yeah, I
Go
mean,
through the next section.
It's just about getting the information. It's just about getting the information, writing it down on a paper, and then just repeating it until you know it. So
I will tell you this, with the other math portions, the good thing about math is once you get it, you've got it. This is the same thing every single time, right?
Yeah.
It's math, and it is, 4 plus 4 will always be 8, right? So once you get it, and maybe it has a bunch of more, different figures and weird looking symbols and stuff, but once you do get it, you're like, okay, now I understand. And that's a shout out to Akram right there. Now I understand. Then it's in the pocket, and then you've got it, and you just do it again. Bang, done.
Yeah.
So, yeah. You got this. Easy.
Kavika says, you have interviewed hundreds of people. You should have a wealth of knowledge. I do have a wealth of knowledge in trading. I do. I could honestly say that I know probably all the price action trading systems out there. Not only because I've interviewed so many people and they've told me about it, but also because I probably went through, like, I've spent so much money on education. Okay, I went through so many different trading courses. I went from the cheap ones, the free ones, to the expensive ones. I've had multiple people mentor me. I could safely say that even if there's like a few ICT concepts that I don't understand, I understand exactly what they're based on. So if they tell me, okay, it's based on this, well, okay, that's not ICT, that's called this. So I have a wealth of knowledge when it comes to price action trading and indicators and what you see on the chart. But you got to understand, trading at a hedge fund level is so much more than what you see visually on the screen. It's a whole different universe of risk management techniques, probability studies, and it's huge. It's a whole universe, and I don't believe any one person can figure it all out. What you have to do is you have to find a niche, and I have an idea of what my niche is going to be in trading, and it's going to be focused on visuals, right? Focused on painting a picture and telling a story with visuals, with charts. So looking at macro fundamentals, but doing so by looking at the numbers and the charts, and trying to not incorporate too much advanced mathematics, to keep it simple for everyday people to understand the reasoning behind the ideas. So that's what I'm trying.
Translate though. Yeah.
Yeah, so I'm
what you'll have to do at those highest levels, same way Dirk will tell you the same thing. At those levels, and it's because of liquidity, you will have to do the math, because you do have to get options involved.
Yes,
in order to hedge out stuff with trades and all that. Yeah, and that's where it gets real difficult. But my had another question. What are the course materials you're using for CMT studies?
So the course materials that I'm using for CMT studies is mainly the CMT curriculum, which is now available.
You have to pay for all this stuff, don't you?
Yeah, it's the whole course. I would say to go through the whole course is somewhere between 4 and 6K combined. So I registered for the December exam. That was $900, and including in that $900 is the exam and the curriculum. So it's a $900 book, basically. It's quite expensive. In total, about, let's say, 4 or 5K USD is this going to cost me to get the designation, the title. But then, what you have to do is you have to go through the curriculum, and then you need to put the things to test. So, for example, if they give you an idea, they tell you about. So in CMT 1, it was a lot about explaining different indicators. What are they based on? How do they work, etc. So let's take the RSI, for example. They tell you about the history of the RSI, who created the RSI, what the RSI is based on in terms of mathematics, how you use it, and all of that, and different strategies to use the RSI. What you then want to do is you want to be able to take that knowledge and try to apply it in your own trading and your own practice to really get the whole idea of how the RSI works. Now, I'm fortunate enough to be able to do this for a living and actually getting paid while testing that knowledge, because my full-time occupation is I'm employed at The5ers. This is my job. Doing these live streams and all this. This is my job. This is my full-time job, and I'm able to read the curriculum, and I'm able to, going forward, I'm gonna start probably next week to take a section of the CMT curriculum and make a webinar out of it. Now, that way, I will give the viewers the information, and I'll also learn the information myself. So I'm in a very fortunate spot here where I'm able to study and give knowledge and get paid doing it at the same time.
They coalesce. It's synergistic, right? They merge together. Yeah, for sure. I think there was another very good question from El Saint. What would you say about this, Jonatan?
Okay, so if you're you will you will become a better trader with CMT, but that is not the point of CMT. You're probably going to become a better trader if you go on YouTube and search for a free price action trading course as well. There's so much good free material out there. You can just go out there and search for whatever, a system, and then you build a system yourself. So there's better ways of becoming a better trader than CMT. So you should only do CMT if you have any interest in working in the industry. So, for example, if you want to manage a portfolio, if you want to get into banking and things like that as a technical analyst, maybe advisory services or something like that, then CMT will definitely help you set up a career path for that. Because if you have the CMT designation, employers will say, okay, this guy is an expert in technical analysis. It's going to be easier for you to get a job. But as a trader, I honestly think it's not going to be a waste of time. But if you're not going to use the title, then why would you want to get that title? I'm getting the title because...
Yeah, I would say the other thing with a title, you need the track record as well, right, from trading.
Yeah, so and you know what? To get the title, you're not going to get the title if you complete the test 3. To get the title, you will need to have 3 CMT members basically supporting you and confirming your job. And you have to have at least 3 years of job history in the trading industry to get the title. So you need prior trading track record to be able to even get the title.
Yeah. So definitely it's something you want to do in conjunction with your own trading, whether you have a personal track record or from Pop Stuff. If you do it through Pop Stuff, you're going to have to catalog all of your trades 100%, right? And then you're probably going to have to get it audited by an accounting firm, a reputable accounting firm. So ideally one of the big 4, right? For it to come together, for you to have any kind of chance of using that somehow to go into the finance industry in some other capacity. Right now, obviously, if you're trading well, probably doing that on the side, you might be doing well already, but it's always good to have as like another portion to what you're already doing. Would you agree, Jonatan?
Yeah, definitely. But it's also, but one interesting thing is that a lot of the big analysts out there working for banks, etc., they are not directly managing money, and a lot of times they're making quite a lot of money from the analysis, and maybe they're not even trading personally, and they're not managing money. Maybe they're not really traders. They're just market analysts.
Dude,
and
there is very, 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 very few traders. Right, and I've got an example. I'll let you finish, but I've got an example.
There's a big difference between analysts and traders. Okay, very few analysts are great traders, and few great traders are great analysts. There's a disconnect between being a great analyst and a great trader.
Yeah.
Because most of the elite traders, you're gonna ask like, but why did you take this trade? And they're like,
Yeah, just because I felt that's how I felt, and I've
got the vibe, a good trade,
and I've done this for 10, 15 years. I just know when this is the right time, and you just punch it. Yeah, for sure. So an example of that is I think David Solomon at Goldman Sachs got paid, I think last year or the year before, like 28 mil. Their top trader, so he's the CEO of Goldman Sachs, right? Their top trader got paid 56 mil. So a prime example, when the top traders are getting paid double the CEO, that's how much they bring in. But the number of traders there are.
Goldman Sachs, like if you guys want to see, if you guys want to see good traders, like how they, you want to try to get a hold of like JP Morgan or Goldman Sachs traders and see how they trade, because like they are the best in the industry. Bar none. Like if you look at if you look at the amount of money, you look at their earnings report and things like that, you look at how much money they're actually making from trading ventures, they are profitable. Like every year they're profitable, and they're profitable with a huge margin. Like these guys, and you will not see them in any podcast, any live streams, any interviews.
That's also part because they're banned from doing that stuff, right? Often they're banned from trading their own portfolios. They have to only trade the firm money. They can't even have a personal brokerage because that's against the regulations, like that kind of stuff. But you also have to realize that when a lot of people talk about people in finance, it's very, very few of them that are actually trading. Just like you were saying, most of them are analysts or doing some other kind of secondary assistive type role to those primary traders. And the primary traders, just like we see in the industry, right here, whether it's 5% that succeed, that kind of stuff. Same deal at banks. You have about 5% of people that actually run through it, and they man the boat.
Yeah, but the thing is, if you look at Goldman Sachs, for example, like the traders that actually trade and make a lot of money, they do trade not only based on their own discretionary trading. I mean, they're using the full force of the analysis of the bank, and they have some of
that's why they have the analysts and everything else, right? But they use them as like both a affirmative and a contradictive indicator. They go, okay, what are you seeing? Is that lining up with what I'm seeing? And they go, okay, you're seeing that. I think that's ridiculous. But they're those kind of gunslingers that are happy to go, I think that's silly. I'm going to place a trade right now against that, even though you've done all this research. But I can see of my own, scrappy research that I sort of disagree. And at the same time, though, you have to also realize that these people that work as traders at these big banks, hedge funds, all that kind of stuff, the general lifetime of them is sub 10 years. So if you're over 5 years, it's the equivalent of working at like a law firm for 20. Most of them are chewed up, spat out, because trading is very hard, right? So it's not, right? It is definitely hard. Definitely very hard.
It is definitely, it's very, it's very difficult, and I think that's one reason why I'm not interested in trading full time. Actually, like I don't like the idea of trading full time, because I feel like if like mentally my life will be so much more stressful, and I'll have to work so much more for trading to be worth it than the amount of money that I could be making, for example, being employed at The5ers doing these live streams. Getting paid to do analysis live and trading live is going to be, for me at least, one of my main income sources, and anything that I do on trading will be that extra. And I feel like that's why I'm also not really interested. I mean, I would be interested in trading full time if I did so with a team, not alone. If I had
exactly, because you've got kids and like a family and all that kind of stuff. That's where it gets really difficult, and that's why most people don't trade full time. They typically have some kind of job, and trading is like a bonus, like an additive that supplements their income, not necessarily full time. So I just wanted to emphasize that to other people out there, that don't expect to just go into trading, go full time, quit your job, all that kind of stuff you see on YouTube, TikTok, whatever. I'd love to say it's realistic, but it's not. It is very difficult. If you use it as a supplementary thing, you'll have a good time. If you try and think otherwise, it's going to be tough. It's not like you can't do it, but it will be very tough. And so you should, try and figure whether you can do that, but transition to that point.
I accidentally added Ashley here. I can't. Okay, there we go.
So I removed it.
Nice. Okay, so what I'm gonna do now, guys, is we're gonna do the giveaway. Announce the winner of yesterday's. My son's at home here with me, and he's just looking at me like, "Dad, you said you were gonna stream for 30 minutes." Yeah, it's been almost 2 hours now. Sorry about that.
That's right.
Gonna make some popcorn and play Minecraft a bit, I think.
Nice.
Okay, so we got. Let me share the screen here, the right screen.
While you're doing that, I'll be back in a sec.
Yep.
Right.
All right. So yesterday we gave away $25 worth of hub credits to the winner of yesterday's giveaway. Today we're gonna give away a high stakes account. Not sure exactly which size of high stakes account we're gonna give away today. I'm gonna let the office decide that one. The person that wins today's giveaway are going to get an email to the email that you used to sign up for the giveaway, with a code or a link where you can get a discount code to get a free high stakes account. Okay, let's run the giveaway. It says not enough entries. That's because we're on the wrong. Well, that was a bit of an anticlimactic moment. Let's change that one. Should be the 21st. Well, let's go. There we go. The winner is Priya G.
Hey.
There you go. Priya G. You just won a high stakes account. Not sure about the size. We're gonna let the.
I think it's Priya.
Priya,
right?
The Priya.
Yeah, I think Priya is like a female name. It's like Indian, I think, right?
I'm terrible at pronouncing Priya.
Yeah, Priya.
Well, I think Priya is way cooler. So not sure. Priya. Okay. Congratulations, man or woman. We have very few women in the industry. Very few. I think watching, looking at the statistics of the gender of people watching it, we have like less than 5% women or something like that. So it's very male dominant industry.
Indeed. But yeah, it's definitely a female name.
Okay. I have no idea. Probably is. I am a bit embarrassed not to know. But yeah, it's what it is.
That's right. I'm here to help out. That's all good.
Nice. Okay, so I'm going to switch quickly to your screen, LJ, and then I will announce the word for today's giveaway. And then I believe we're going to have Victor and perhaps Rich is going to be joining for that session we have coming up as well. Unfortunately, I'm not going to be able to join. I'm going to have lunch with my son. I'll most likely be joining after that one. Okay, let's see. What is the first word of today's giveaway? So guys, we are running a giveaway every... Okay, I can't find that giveaway. That's weird. You know what? I'll set everything up in the... No, I have it right here. Okay. There should be a link in the description and everything. I'm just going to edit the time of this one because I accidentally put it on beginning. It's a little bit late. Okay.
I'll say, whilst you're doing that, okay, you ready?
Yeah, I'm ready. The first word of today is going to be market. Wasn't that the same as yesterday?
No, it wasn't. No.
Okay.
No. Yesterday was buy for the first word.
No, that was Monday, wasn't it?
Was it? What was yesterday then?
No, it was maybe it was yesterday.
No, that was yesterday. I'm pretty sure that was yesterday. Monday was something else. I'm pretty sure. Dude, I'm sure. I mean, I could be sleep deprived, but I'm pretty sure yesterday was buy for the first word. Chat, call me out. Anyone that was here was buy the first word yesterday on Wednesday. Call it now. Call it now. On. I swear I'm not that delirious.
Okay, yesterday was market breakout order. That is not the same as today. But today's yeah, LJ, this was Monday. Monday. Buy was Monday.
No, it's Tuesday, surely.
No,
Dude,
Monday.
I haven't lost that many days.
That was Monday.
No, it wasn't buy the dip was Tuesday. Right?
Oh, buy the dip was Tuesday. Okay, what was Monday?
Yeah. Okay. At least I got that right.
Okay, okay.
Yeah.
Well, first word of the day is, let's see, where can so we can pull that up on screen. That's right. First word
Monday
of the day is market. Okay, guys, I'm gonna have to dip out. I will join you guys a little bit later. All right, guys.
All right, man.
Care.
See you later.
See you.
Ciao, bien. Adios. All right, guys, you got me. Yeah, dude. Precisely right. I do need some sleep, but we'll get there someday. Not today. Sleep when I'm dead, I suppose. One day soon. We'll find out. I will say, guys, whilst we've been chatting about a whole bunch, markets have not moved much. So that's why we didn't delve into this stuff. We're literally not moving. So right now we got gold up on the screen, doing nothing. Let's go to euro dollar. We had that slight dip, still within this range. Exactly what I was looking for before. Let's pull back to here. Potential push up to this level. A failure by the prior highs from last night during New York session, and then come down. Right now, everything is up for grabs, right? So pound, doing not much as well. Slight pullback. We go to Aussie dollar. To do a general run over whilst we've been talking. Again, not much going on. Same pocket. Obviously, I'm long through here. So that's my preference. We do have building buying pressure coming through on the Aussie dollar. So I do still favor that. We go to the Dixie. We've now got that recovery roughly to that level I was looking for us to then pull back down from, right? So I think very much we're in a wait for the following data coming through, and primarily Jerome Powell speaking tomorrow. So, hang on, Sham, LJ, you don't trade indices like US 30, US 100. I do trade the NASDAQ, my brother. I definitely do. So we'll go over the NAS. Right, hang on. I got a different one that has everything outlined. Here we go. So the NAS right now. This was part of the channel we had through last week. This week we've broken down through that. Once we broke through that channel, you can see we've obviously collapsed. This is on a 15-minute time frame at the minute. From there, last night we had that further collapse. Everything got hammered, all the major tech players. So Nvidia, Tesla, Facebook, Amazon, Microsoft, Apple, everything got slaughtered last night. So we saw a major dip. Initially, I took this trade here just before New York Open, took an L on that, right? After that, once we broke the lows just here, I ended up jumping into a short from there. And then that turned out pretty well. Recovered the loss from the prior trade, came right down here. I was not looking for quite that deep of a dip. But you guys can see this is the prior liquidity area that I did have marked out. So we'll go to a higher time frame. So if we go out to the 4-hour, you can see the bottom of this wick has come back into this period, right? So just around here, this is when we had the non-farm payroll revisions. Prior to that, everyone was pushing for a change in the rate cut outlook. Then we had the revisions. That came in with more impetus for rate cuts rather than a flat hold from the Fed, and hence we drove up. After that drive higher, we had that slight correction and then a push on. Came right up, came into this channel, broke outside, come right down. For today, if we go back down to the lower time frames, I will say I am very neutral as far as where we are in terms of the spot price for the NASDAQ right now. So we look at the probability distribution. This is the options for the 0 DTE options for today. So 0 days to expiry options that we're seeing on the market. How this works is basically just like we were talking with Jonatan. You enter options, get into a bit of math. Spot gamma is basically what pulls the market towards where the heavy cluster of options are priced. And this is because the market makers that provide the options potentially have to deliver on those trades if people exercise the options, right? So as their cluster of options that they have in their books, when the spot market approaches those levels, they have to continually buy up whatever the underlying asset is in case they have to deliver that to the purchasers of the options. Hopefully that makes sense in the simplest form. So basically what that means is you get a draw towards that price typically. Now sometimes that can deviate depending on the amount of flow for the options. Some days there's a larger volume, some days it's a very smaller volume, depending on what, whether it's data or, the Fed or Jerome Powell speaking independently, that can skew the price action through there. So as we looked at this, we're seeing 23,243 right now. So we go back over to here. We'll look at the current spot. We're sitting about 23,238. So 4.3 would only be a touch above where we are. So we're very much in line right now for that options pricing for the New York Open. So typically what you want to do is when say if hypothetically we were outside the market, say up here, and you had the options pricing down here, you'll look to short the market going to New York Open for retrace back into that relative options level. Capture that difference, wait for the options to clear, and then see what other price action we get, whether it's up or down after that. Today, right now, where the spot price is currently clustering is right by the options price, so we don't have a clear indicator for that forward price coming into New York. And particularly given the flux we've had with NVIDIA, Apple, all the big tech majors, I would wait until we get through into New York to see where that price action actually flows through, whether we get some kind of buying coming through, seeing as that we've got a relative discount for those major tech players, or if we see further depth of selling coming through. Musa asking, what indicators do I have on my chart? So right now, whoops, I wasn't meant to shift that. Right now, I've just got this is my most basic charts. Obviously, on my personal accounts, I have much more bits and pieces, indicators for different time frames, whether it's swing trades, intraday trades, scalp trades, that kind of stuff. But for this that I have up here for you guys on TradingView, I try to keep it very simple so it's not too confusing outside of my freehand drawings on the chart, or Picasso as we call it over here. So this guy that you'll see right now is the Bolly bands. So this middle section right here is a 20 moving average, and then you have a 2 standard deviation above that from the 20 based on the 20 moving average, right? So 2 standard divs. So typically if you look at a bell curve, just like we're looking at for the options pricing, you go out to the extent, that's where the 2 standard divs will be. So that means that's where you have, a sub. You can go to either the 2 standard div, or you can even price it to like a 3 standard div or more. But basically, that's where the outer portion of pricing is going to be. So you're going to have depending where you put that standard div, between if you bring it in a bit, less than 5% or 2% or less probability of price moving outside of that range. So basically, majority of price within 90% or so, depending on what standard div you use, is going to be clustered in that majority portion. And hence, you can see right here, majority of price is clustered within either side of these bands, right? Now, when you use this, you don't want to just look at it on one time frame and say, okay, we've hit the upper band, you need to now sell. Because if you go from the 15, you go to the 1 hour, you can see there's a much larger band, right? So it's something to look across each of the time frames, go from the 5 to the 15 to the 1 hour to the 4 hour to the daily. Mark out each of the areas, each of the extents on that, find out where the relative levels are, and basically it's another sort of variation of the ATR that you're looking at. The other piece I have in here, you guys will see these lines going across, especially the pivot points, which once again, that's another variant of the ATR. It's based on the high-low close from the previous day, basically mathematically working that out with the expected moves for the following day, right? So where you should see the relative neutral level, this would be, the pivot point. That's what's called the main pivot point. Top side is the R1, so first resistance. Bottom side, you got S1, S2. So these are the supports, right? And that's basically calculated on the prior day's total range, where we opened, where we closed, what highs we saw, what lows we saw, and gives you a following expected range for the next day. That's basically how that works. I think we got a bit of the team in the background, don't we? I'm definitely ready right now, so punch it. Let's go.
Hello.
Hello. How we doing?
How are we doing, gang?
Going strong.
Hi.
Oh, well.
Everybody is well.
Yes,
We're holding it down.
Well and kicking.
Good stuff. We've got Richie Rich, we've got Victor, the masked mysterious trader, and LJ, who has been valiantly holding the fort, whilst the rest of us just goss.
There we go.
I can only assume that's Jonatan in the background, messing around with sound effects, unless Victor has discovered the sound effects.
No, it wasn't me.
Then Jonatan is just trolling us in the background as per usual.
Likely.
Guys, first of all, welcome to our weekly ABL podcast. This is the penultimate weekly ABL podcast segment. Next week will be our final one as we pause the ABL brand so that we can refocus our energies and attention onto the future platform that we're building. So yeah, let's get straight into it. How's everyone's week been?
Good to mixed to good to mixed to good to mixed, I would say. We've had choppy markets this week with the back and forth. There seems to be a lot of indecision with the market this week, definitely. So I don't know what you guys have felt yourselves, but net came out ahead, but it's been, roundabout.
Yeah, in my case, can you guys hear me?
Yeah.
Yes.
Okay. I haven't had a big hitter, but that doesn't mean it's not a good week. I did have a couple of entries. I think I shown a few of them. They didn't pan out as, we didn't get to upgrade them to higher time frame. So, but I closed them at the end of the day with some wins, but not as much as I wanted. Of course, it was I think 2 hours each, and that's on the lower range of what I'm expecting of these trades. But the win rate is low, so I understand that that's not always going to have that move. Other than that, the week has been great. There's a lot of volatility that we saw on Tuesday on my other strategies. That has been super great, super good, way above average. That's about it.
What about you, Rich?
So when Mike said, "How's your week been?" I was thinking, hang on, well, it depends how we're measuring it, right? Are we going by results? Are we going by, all that kind of... So
I'm going by sleep, Rich. I'm going by sleep.
Well, dude, you and me, Mike, like we're on the bottom, right? Bottom tier.
We're feeling solidarity with Rich these days. That's what it is. We're trying to make Rich feel less sleep deprived.
So if we're talking about sleep, not so good. If we're talking about P&L, pretty okay. If we're talking about having a plan and clarity around it and executing on that, I would say the week has been wonderful. So the things that have been in my control, I've had a pretty awesome week. The things that have been slightly less so in my control have been a bit more challenging. That's pretty much my week. I'm trying to, and I say trying because I believe it's a lifelong skill, trying to detach the idea of my self-worth from my P&L results. I can control how I turn up. I can control what I put my time and attention to within a little, but the results, that's outside of my control. And I spent as a trader many years, sadly, feeling pretty crappy because my results weren't the way that I wanted them to go. So once I detached that, I was able to start saying, okay, I'm in control of how I feel, because if I took control of how I feel, I can then control how I choose to turn up the next day. So if I get crap results, I feel crap the next day, I'm going to turn up I'm not going to turn up very well. And then it compounds and all that sort of stuff. So I'm a massive fan of law of attraction. And I believe that you can really fabricate something into existence from a mindset long before you've physically achieved it. And what I've gone on to do is build a track record of then starting to achieve those things that I believed I could even before I had them, because I was behaving like someone that already had them. I know it sounds like a little bit of poetry, but when you get it dialed in, you turn up as a completely different person, free of all the baggage, the trauma, and all the hassle. Mate, I'm off on a rant. I didn't mean to be. You said, how's your week been? My week's been good. I'll shut up. Sorry, dude.
I agree. Like, you got to have that, first belief to do something. Like, in the sense that you still need, like you said, you need the track record. You need the actual substance behind it, not just belief. But you're not going to bake a cake without first thinking about baking a cake and actually going in and doing that. So if you don't have that forward projection of, okay, this is where I'm going, how do I then try and reverse engineer that and build that out, right? You're not going to at all have any chance of getting there, right? And that I assume that's sort of what you're saying, right?
Yeah, but what if we went one step further? What if you baked two cakes? One of them, you were in such a negative set of mind. You're like, I'm going to burn the living daylights out of this cake. I'm going to forget to put in sugar. I'm going to put salt instead. Look, if you had that version versus the cake, you're like, this is going to be the creme de la creme. Would they physically be different based on how they... I think so.
Yes, I think so.
Yeah,
yes.
Of course. Yeah.
I think... you have to see it before you make it. And whatever you see is likely what you're going to be making.
Yes, yeah, very true.
Obviously, it's not something like esoteric or metaphysical that the mind will bring it into existence. That's not what we mean. But it's the underlying idea that how you think and the fact that you're thinking about something will affect the actions you take towards reaching that goal. And in essence, you can say you created it, not literally, but you created the end result with your mind, with your thoughts, because those thoughts were converted or at least influenced your behavior, your actions, your habits, and things you do and you don't do, and making sure that sugar is in the cake at the end.
Yeah, I really like what Nora said. To become a profitable trader, you need to behave like a profitable trader, even before you are making any money. There are traders that I know that are profitable before their equity curve starts to come back to break even, more because of their behavior pattern of how they're choosing to turn up. And it's so what do you do? What do you do when you have this set of mindset? You believe in yourself, you believe in your process, you believe in your skill set, and you're putting in the work, and the results just don't match up. But you believe that the work you're putting out is a high quality work, and you're just seeing this disconnect between potentially the P&L. What do you do there?
Well, firstly, I'd question, how do you define that everything's working well, right? If you have a plan and everything's supposed to be good and what have you, well, then the results should come. If the results aren't coming, then something is fundamentally flawed, right?
Or it could be expectations, right?
Yeah,
it depends where your expectations are.
It could be expectations, but you still want to see incremental improvement. in one form or another, right?
Yeah. Okay. So guys, give me a number. Give me a number. So let's say we do all the work. We do the proper stuff. We've managed risk. We've taken the trade that's a grade A in line with our plan. We've got a back-tested plan. It proves a profitable edge. You take one trade, and that trade is a loser.
Mm-hmm.
We take 3 trades. The 3 trades are a loser. We take 5 trades. We're still in a drawdown. We take 10. At what point, how many, because, LJ, you said about expectations. I see a lot of traders that go, I just had a losing day. My strategy sucks. At what point do we need to have a number that gives us a big enough sample size to say, and Victor, I'm keen to hear your answer on this as well. At what point do you go, that's a big enough number? Where do we set our expectation?
Victor is the resident statistician.
Yeah, Victor, go first.
The expected value, or the influence, or in this case, because we're talking about trading, the edge that you're trying to measure, it depends on the size of that effect. If you have a very profitable system entry, or it can be even a rule that you apply, right? It can be anything. It doesn't have to be necessarily P&L. But if you want to measure an effect of something, the size of that effect is very important for the number of trades you need, for the sample size. So let's say I improve my entry, and that improvement is hugely more profitable just by the fact that of the entry, regardless of the rest of the parameters of your system. It won't take me long to understand and see it in the graph. Maybe after 5, maybe after 10, you already see a difference in the equity curve of those two, one with the original entry rules and one with the newer improved entry rules. Well, so the effect size is very important, but typically the effect size isn't going to be huge. Not in the positive sense. Negatively, yes. You can clearly see you put in something in your system, and that can be not only a rule, it can be the whole system as a whole, right? The complete structure as a whole. You can clearly, put your stop loss wrong, and you will see a very marked negatively effect of that rule. But on the positive side, typically, you're not going to be picking up edges just like that with huge effect size right off the bat. So typically the effect size of these rules and systems are minor, and that's what makes it a little bit difficult, and that's why you need more than just 5 or 10 or even 20, although by 20 you should be seeing some kind of differentiation between the equity curves already. But you wouldn't be able to say this is statistically significant with low number like 20 or so, because that effect that you're measuring could be just caused by randomness in the market. So you need a lot more.
20, we're saying.
About your pardon?
So more than 20?
It depends on the effect size, but that depends. If the effect size, normally the effect size isn't as huge, but if it is, I would say, well, let me put it this way. If you have a one way you can also see it is in the quality of the equity curve, right? So only the fact that it ended up positive isn't enough. It's also how long it spent in negative territory, right? If you have a trade, an equity system and an equity curve, and it goes one time below or maybe 2 trades, but all of the time it has been capped above, not only above, but climbing steadily above, even while having losses and a few losses, but it kept increasing, I would say that's a very good sign that you're actually onto something good. But if you, for example, you can even have just the number of the sample size and the end result isn't enough either. Let's say you did 100 trades and it went up 20R, went down 20R, and up 20R, and down 20R, and in the end it ended 20R up. Would you say that's a profitable system? Or would you say that's just the regular fluctuation that are randomly caused by market fluctuations? So just the P&L and the sample size isn't enough to conclude, okay, I got something, this has edge, and it got to be working. what I think, or I assume, a lot of traders, they measure, let's say, a number, and typically I would expect or assume I will suspect actually that's not enough. And whatever P&L is measured at the end, they then try to assume, or they assume that's going to be, they don't account for the fluctuations, for the randomness that comes with the market. And if you don't do that, and you're very close to zero, it might be just that you randomly stopped at a place where you're above zero. But if you had continued trading, you'd be perhaps below zero again, meaning you don't really have necessarily proven that your system is profitable, at least not beyond a doubt, or statistically significant proof that it is profitable. That's another thing. Just measuring profitability isn't enough to prove that you have profitability in the system. I'm hoping I'm not going too technical with this, but so how much depends on the effect size you want to be measuring, and also and that will affect the number of trades you need. And 20 is, you could getting, I would see 20 like a pilot, where you get a feel of what, how it's going to perform, but it's still too early to do.
It's a general. I would say probably 100 really is probably more of a pilot, right? Because typically you want a minimum of 300 samples in statistics in general to get a good idea.
Yes,
I don't know if you agree, right? So
yeah.
20 is good first stance, and then you try to push to 100, and then see how it goes.
The thing is, for those who are wondering why we're seeing 300, it's mathematically calculated, right? When you see, for example, let me give an example of people who might more familiar with something else. When you see exit polls, or any polls on the news or anywhere you see that, they typically, you'll have like an asterisk and saying within a margin of 1% or 2%, right? That's the confidence interval of whatever number they're saying. So if they say 60% is against whatever, or voted for this party, it's actually, and the margin, the confidence of interval is perhaps 2 or 3%. That means that it's between 63 and 57. That's what the confidence of interval tells you. That says 95% of the chance is the chance that it is within that the range that I just gave you. And when you are getting to 300, typically you can have statements that will have within a 1% of confidence interval. So the precision of your statement, the confidence of your statement can be much more precise. But if you have less than that, I don't know, like 40 or 20 or even 50, that means that whatever value you're getting out of your calculations, of your measurements, you have to take them with a huge, not a huge, it depends on the number, but a much larger range of confidence interval. Maybe you're measuring 5% growth, right, on a 6-month period or a monthly period or whatever, but an interval, confidence interval of maybe 5% up and 5% down. And so there is still a chance, or in this case, the bottom is exactly zero, but let's assume you measure 4% growth and it's 5 up, 5 down. It's positive, but there's a chance that you don't have a positive, profitable system, because the confidence interval still includes zero. Mm-hmm. So that's something. So that's why we need, and we stress on having ample sample size to close or to make it more precision. In other words, make it more reliable, the measurements you're measuring, and filtering out randomness. Randomness you can't avoid. The market has has randomness all around it, Your trades will be random in the sense that the sequence of the results will be random. Even though you can have the most objective rule and sequence and trade plan, we don't know if the next one will be a winner or a loser. That's random. So the distribution of your results are definitely random. But you want to minimize that randomness, and you do that by having ample sample size so that your statement and your measurements are within a very small, or as small as possible, confidence interval.
Yeah, and this could be different for different traders, right? Like swing traders, they might be hearing LJ say 300 trades, and they're like, "You
it's going to be completely different in that case." Yeah.
And it could be like, well, that's 6 years worth of data. But I love what Victor said, where look, if we take a small sample size, then what we can do is we can take another small sample size, and although one sample size could be, say, we take 20 trades, and maybe at the end of 20 trades we go, I'm down 2R. We take the next set of 20 trades, same rules, and maybe now we're up 5R. We take another set of 20 trades and now we're up 3.5R. Now, over 60 trades, we've got a small gain, but what we're looking at is taking a big sample. LJ's talked about 100, if not 300 trades. Then we can chunk them down into, say, let me focus on the next 20 trades. And then when I do 20 trades after that, I'm looking for similarities between them. Now, I understand in 20, the sample size is too small. We're going to have outliers. We could have a negative 10R or even a 20R month on 20 trades. That doesn't mean to say the system is flawed. Victor and I, we were talking more recently about kind of how to quantify the power of a system, and we were looking at maximum drawdown versus absolute total returns. It's a conversation for a different day, but I'm building a sample that I want to prove something within the price action at the moment. Now, I know to do this, it will take me 600 trades. I don't want to sit down and just chew out 600 trades worth of that backtesting candle by candle. So what I've done is I've chunked it down into 100 trades at a time. So I will sit down for a session and I will go candle by candle and record 100 trades in one sitting. Now, I know that in 100 trades, the likelihood of me showing profit is going to be relatively high, but it doesn't mean to say it might show profit. So if I get 100 trades and I go, right, there's a 0.2 expectancy, I've made 20R over 100 trades. What I really care about is, does the next 100 trades agree somewhat with the first bunch of 100 trades? And then I go, wow, I think I've found something that's not just randomness within the markets. I might find a small truth, and I've got two sets of 100 sample sizes, different pairs, different dates, and they're in agreement. And then I'm going to do the same, and I'm going to do it 6 times. And what I'm hoping is that at least 4 or 5 out of 6 are in agreement. And I'm going to say, mathematically, it should be impossible for me to arrive at the R value that I've got right now. So with all this in mind, Mike, I want to ask you a question. If we need to be looking at a big sample size of trades, 100 trades, 20 trades, 50 trades, why is it as traders we get so emotional when the next single trade is not a winner?
I don't know if it's the next single trade.
Come on, there's so many traders get really caught out and bent out of shape on the next.
Maybe they do. I don't find myself doing it on the next trade.
Okay.
I think it's compounding. So I don't think it's necessarily right. You have one bad trade, or I think it's, if you're on a losing streak, right, you dig yourself deeper into a hole, right? Those of you, Jonatan says, with a few people asking about me when I'm joining, and I said to him, yeah, those sadists just want to know when I've blown my funded account. So I haven't blown it yet in 4 days. But I am 9.5% down, so I'm 0.5% away from blowing this thing, and it is because this week I just can't get a read on the markets. LJ said, he's up on the week, but he himself has had a difficult week with the calling out the markets.
Up 4, down 4, up 1, down 2, back up 3.
So I started the week with a couple of wins, and everything was going fine. It just carried on as I had been for the last few weeks, which had gotten me to the funded stage. But it has compounded that every time I've hit a losing trade, that has, to the point where yesterday evening I felt like absolute rubbish. I was sitting there going, what is wrong with you? You've spent 2 weeks absolutely nailing it, no problems, just on it. and the last 3 days have just been absolutely dire. Now, when I sit back and I try to kind of self-analyze and, you know, think about, right, okay, what has changed since those last 2 weeks, right? The market is still there. The market has been choppy. Market conditions haven't been ideal. The price action hasn't been to my liking. That's one thing. I'm not very well slept. Had a difficult weekend with my son being sick, taking him to hospital twice, etc., etc. So is there residue from that? Residue stress and those sorts of things? You know, is there an element of me trying to, you know, just trying to carry on, you know, and not necessarily adjusting my approach and my style and everything else to having a funded account versus evaluation accounts, right? Okay. And one that might be surprising, and I don't know if there's any truth in it or not, but I did give up coffee at the end of last week, and the caffeine may have finally left my system, and so it's just progressively gotten worse and worse as well.
And you didn't play the music either.
100% it. That's completely it. Caffeine and the music, yeah, that tune, that's what you need.
The music has been playing. The music has been playing, but the music just hasn't been working for me this week. So the music that I thought was my edge the edge has gone. The market has rejected my musical edge.
The caffeine complements the music.
So to go back to your question, Rich,
right.
I would say the problem is when it's compounded. Right, so
but you're talking about 3 days of compounding. Is that a big enough sample size with everything that we've spoken about previously? Is that a big enough sample size to say, hey, I've had a bad 3 days, it's enough to feel disappointed or frustrated?
I would say it's enough to do something different. If you're a day trader like me,
okay,
right, then it's definitely enough to say, hang on a second, this isn't right. You know, you literally, you're not making any kind of pullbacks. You're not making any. You're just seeing just a downwards equity curve, right? There is something fundamentally a loose wire somewhere, right? The workflow isn't processing normally. There's a broken connector somewhere. Something isn't adding up.
Are we talking strategy or are we talking you?
No. It's somebody said it earlier, right? This is all psychology. This is 100% all psychology.
Okay.
If you have a strategy that works, right? Yes, you might adjust it, you might change it, and what have you. But I am certain as certain can be that psychology plays the greatest part in any successful trader's ability. Because somebody said it earlier, you can trade with trend lines, you can trade with break and retest, you can trade with the simplest or most complex strategies. LJ has one for trading the NASDAQ on New York Open, right? Do that once a day and you can make money, right? But what's going to stop you from doing that? It's going to be boredom, it's going to be FOMO, it's going to be greed, you name it. It's going to be any of one of these number of things that are going to suddenly trigger you to go, oh, actually, no, I'm not going to follow that plan. Mine is, you know, a multitude of things that I'm still trying to figure out. Unfortunately, it's taken me to minus 9.5% to put the brakes on it and go, all right, hang on, Mike, this isn't right. This isn't working. And yeah, that's my view. I think it compounds. I don't think it's a one bad trade. No, I think it's there's a point where if you're, you know, somebody was asking for swing traders, right? Swing traders itself is a different story, and Griff is probably the epitome of a man with patience, where he will wait weeks and weeks and weeks to take a trade because it doesn't hit his plan. So his discipline is incredible, his patience is incredible, but then if he does then finally take a trade and it doesn't hit, he'll stick to that plan, he'll keep going. So there's a huge amount that is, for me, psychology.
Mike, I got a few, maybe just one advice for you, and obviously it is for everyone out there who is in the same position or is experiencing the same as Mike which is one set of few bad days, and we all have those. Life is not constant. I mean, we have external things happening, kids and other things, relationship, family, traveling, you name it. Life goes on outside of the chart, and it will have its effect on us as long as we're alive, I suppose, unless you go on a automated strategy. One advice, Mike, if 3 days, or I think you said 3, right, or 4 days, you said this week.
Today's not finished yet, so okay. There's still a chance.
Okay, so 3 days, the last 3 days of this week has been able, because of the external factors outside of trading affecting you, has been able to cause you 9% loss in that account. One advice that I would give to someone who says that is to, in my mind, I would like to lower your risk by factor 10. A bad 3 days is nothing. Someone can have days and even weeks of things going badly in their life, right?
Yeah.
Relationship can go rocky. We all have all kinds of stress outside that is outside of our control, outside of trading, that are outside of our control, that can last 3 days for sure. And in those periods, as a trader, we should, even if it affects us, because we're not perfect and nobody is, and it's okay to have these down, being affected by them, because we're all learning and we're somewhere, on our journey becoming better all the time, but no one is, completely, there is no end, right, on the journey. But what I would say is, it should not be that these things cause you this much damage. That means that, in my mind, you're trading too large, and you should. I know it is not sexy. We all want to have these big amounts. We want to, at the end of the day, say either to ourselves or even to our audience, I made X amount of percent this day, this week, this month, or whatever. And there's a value. There's a baggage or a weight, to it, because it feels good, and we're all humans. The person who says doesn't feel it that way is probably not human, right? Because it has a value to us. But that's what I would tell you. Just lower your risk tenfold. And for the next time something like that happens, you're only down almost 1%.
Yeah, and that, in fairness, that's what I have been doing. Is as I've as the equity has come down, I've been lowering my risk as well. But it's a rut, right? It was the same risk that got me funded, right? And so maybe the lesson is, lower your risk as soon as you do get funded, right? And preserve that capital, from a different perspective. My strategy is that you go in for the tight stop losses. You've got an example of a trade idea that's been triggered at the moment on Euro USD right now. Right now, this is just based on Fibonacci structure, on higher levels, higher and lower. It's actually tapped into the 50, so this one may not work out. I don't like that engulfing candle on the 1 minute, but these are the things that I look for. These are the things that have worked for me for getting funded several times. This was my first time funded since September last year, so that in itself was already an achievement, and I recognize that. But I'm still in the process of trying to understand what is it that's changed since last week and the week before. What are the variables? And you're absolutely right. Risk is definitely one of them. And I have been probably too lax in my technical setup in terms of my tools and the systems that I use. So my MT5, one of the trades that I got a massive loss on was purely because I wasn't paying attention to my EA that I use to place my trades, and I had saved the settings previously to set to 0.1, 0.2% risk, which is my usual standard, and the default had reset somehow, and it was 1%. And before I knew it, suddenly it was a trade I wasn't paying attention to, and all of a sudden I was down down 1%, tried to rescue it, thought, right, okay, let's just reduce the stop loss here, or lower the stop loss. No, bigger loss. And, all of a sudden you end up in this hole that you're trying to dig yourself out of.
Yes.
And that spirals, right? And I know this, this isn't something that I'm alien to. But I think sometimes it's hard for people to necessarily recognize when they're in that rut and when they're in that what's the word, that moment of psychological wear down or whatever it might be that might be causing one thing or another. We have had some news come out. I just want to pull out. This trade might not be valid because I can see we've got quite a bit of news coming out from the White House and US officials with regards to tariffs for the EU, which is probably why we're starting to see this spike come up. So it might not be a valid trade. We might actually start to see us come back up to the 166 or even higher level. There are levels far higher up as part of the move that we started, so that may not work out as a trade. So hope nobody's here for signals. If you are, naughty. We don't do signals, but yeah, just probably not one that's going to work out on that one. But Rich, if you were to go back to that sample size, right? You've spent that time, you've spent those years, and you said about that kind of that mentality, right? What was it that you said you changed your approach? You kind of walked the walk and talked the talk, and you told yourself and treated yourself as if you're a profitable trader. Mm-hmm. What does that look like from a practical perspective for somebody that's trying to think, right, okay, this is time for me to now, switch that, flick that switch? Because I'll be honest with you, most of you will know, in fact, anyone who's regular here will know, I'm probably the most self-deprecating individual amongst us. Incredibly hard on myself, and
incredibly hard, definitely.
And it's something that my therapist has said many, many times as well. And I haven't discovered yet where that stems from, where that comes from. That's still a process that I'm going through. But what is it that you think that kind of, did you just suddenly wake up one day and say, right, I'm going to be nice to myself, or I'm just going to, listen to some positive affirmations? What did that process look like for you?
I think we've got to understand that this is like poetry. This is like artwork. We're never going to wake up one day and just finish that sculpture. It's something that takes years. I was explaining to Jonathan more recently, this is a process of 4 years, but I can categorize that down into 3 camps. Now, these aren't the only 3 camps, but these are 3 very, very crucial starting points. Number 1, self-talk. If you are somebody that talks down to yourself, you are installing that talk deep into the subconscious, and that is going to become your level of self-esteem and your level of worth. I really struggle when I hear people talking down about themselves, because they're just constantly putting themselves down. We have all gone through life and seen people that have felt and acted wonderfully about themselves, and we've looked at them and thought, they've got a lot of confidence for somebody that probably doesn't represent yet how they should feel about themselves, but they have managed to engineer a mindset to do it. So number 1, we get rid of self-talk, and we don't just cut stuff out. What we do is we replace. For an example, I think if you stop smoking, you would replace it with something else, and then it becomes a little bit easier. So if you're somebody that has a lot of negative self-talk, first of all, we've got to become aware of it. We're going to catch it. I traded like an idiot today. Okay, that's an example of negative self-talk. So I traded we catch it, we stop, we take a breath, we pause. There was room for improvement in my trading today. Now, what we're starting to do, and Mike, we've spoken about this before, the person that says, I can't do that, it biologically shuts the brain down. When we go, how can I do that? Now the brain starts looking for solutions. So number 1, negative self-talk. Start catching it and replacing it with, you know what? I could have gone for a walk today. That would have made me feel a bit better. Rather than, I sat there all day, I didn't go outside, I feel like rubbish, because we're just inciting that into our subconscious. So number 1, self-talk. So if you are journaling or if you're doing anything like that, write down self-talk and just notice the times, for an example, here he goes with the old brandy glasses again, 2 glasses. One of them is full up with loads of stones, okay? When you do something right, you move one stone from one glass, this one, into this one. And at the end of the day, you pour them back and you start over again. It's a visual, physical feedback loop that releases a little bit of dopamine because you've done something good. You can see progress. And you're starting to measure how many times did I capture my self-talk. This doesn't just work for self-talk. This works for any behavior pattern. So number one would be self-talk. Number two would be take an account of who you surround yourself with. If you've got people that are drilling holes in your boat and lowering that water line and you're starting to sink, you've got to recognize, are they helping you move towards your bigger goals? So I'm incredibly blessed to have a wonderful, wonderful group and support system around me. And I would say it's actually taken years, because I used to just trade on my own, in my own thoughts, and talk down to myself all the time. Now so look at your social group. Is there somebody that could be swapped out? You know, like we play these fantasy football leagues. I mean, I hate football, but you know, people do. And they're constantly trying to sub out players for better players. Well, if you were a reflection of the 5 closest people around you, we want to try and surround ourselves by the 5 people that aspire us. We've heard it said before, if you're the biggest fish in the tank, you're in the wrong tank. So if you can look around... Sorry?
Richard, I've got to ask you a question. So who do I get rid of? You, Victor, LJ, Jonathan? who do I need to ditch?
Apparently it's the dog. The dog, mate, the dog was giving you a lot of trouble. I mean...
do you know what the
just
dog
like
is
I need to get rid of the cat, right?
The dog
Animals.
is my... Did you know what the dog is? The dog is my touch grass excuse. So the dog actually is. In fairness, actually, the dog came back. Actually, do you know what? The dog came back this weekend, having been at the in-laws for a couple of weeks. Yeah. So I got funded without the dog, and now the dog is back. Damn it! You might be onto them something there, LJ. Damn it! No, the poor dog.
Poor dog.
It's not the dog. It's not the dog. It can't be.
We need to all get chickens. Apparently, chickens are good at trading. You know, like we've seen it. Dogs, cats, no good. So there we go.
And so number 3 on this would be controlling the social media that you're watching on a daily basis. Okay, so when it comes to, I watch like these YouTubers, and they are incredibly entertaining. Are they educational? Are they helping me in the direction that I want to go on? So all 3 of these things have got one thing in common. It's controlling our inputs. Number 1 is self-talk. Number 2 is going to be the voices you hear in your ear. Number 3 is going to be the visual things that you watch. Because these 3 things, if we can control our inputs, which are in our control. I said that totally wrong. These inputs are within our control. If we can control these 3 things, what we're starting to do is putting a good foundational block down each day. Now that takes time to compound. We need to lay a lot of blocks, and we need time for it to dry, and we need to be able to stand on it before we can build upwards. But if you can start to gain control of the voice that you hear inside your head, the voice that you tell yourself, and the visual things that you watch on a daily basis, then that's a really, really powerful starting point, because it will change the way you feel. And if we can change the way we feel, we will change the way we act. And if we can change the way we act, we stand a chance of changing the result, which is a byproduct of our actions, which is a byproduct of our feelings, which is a byproduct of our processes or our traumas. As Mike said, he's still working through this stuff. This is why I said it's a process of 4 years. Am I finished? No. It's in the best state it's ever been, but it may never be finished. So that's where I would start. Very practically, those 3 things would get the ball rolling and give it time. It takes time.
Yeah. I think it's interesting because this also does come down to personality as well. Because, for example, me as an individual, I am everyone's cheerleader, but I'm the hardest on myself. There are other people who have no problem being their own cheerleader, no problem being their own kind of supporter and encouragement and everything else. So I do think there's also an element of personality here, and that also is something to link to your trading strategy and your trading approach. And I think something that a lot of people forget, or maybe you mentioned about social media. I think social media gives an unrealistic expectation and an unrealistic view that people might have for what is it that they can get from trading, for example, right? And I do feel as though if you have watched certain influencers, if you have followed certain influencers and thought, oh, do you know what, look at that Lambo, look at that house, look at this, look at that, and everything else, you thought, I want a piece of that, you might be leaning towards taking a trading style or a trading approach that doesn't match your personality. And I think that's something that maybe we don't all necessarily, I've certainly looked into it, but I think, Sam, it's my screen. So I'm minus 9.5% down, so don't take this trade if you want. But there's a thing about, if you have a certain personality type, if you have maybe an addictive nature, or if you have various different other elements to your personality, then you should adjust your trading strategy and your trading plan to meet that and to match that. And I don't think, maybe you guys know of somewhere or some way in which people can do that, but have you guys encountered any way in which people can try to match and discover about their personality and what might be a suitable trading plan that goes with it?
I think if I can lean into that, I think if all the high risk reward ratio strategies, which inevitably will have a very low win rate, you cannot have someone who is too confident trading these overconfident, trading these strategies, because the strategy hinges on the fact that you want to be extra critical of each one of them, because most of them will lose. And if you're too loose with your selection of the trades, and that will be a result if you're overconfident of yourself and your abilities, what will happen is that you're going to take too many trades, and most of them were going to be the strategy already is very you'll have lots of losers, but you being overconfident will totally destroy the strategy. So I would say I think it doesn't matter across the board, but especially with high risk reward ratio profile strategies, you want to have someone who is not impulsive and not over optimistic. In any across the board, you shouldn't be that, but especially on those, because it will break your system.
LJ, Rich,
definitely. I was piggybacking off what you were saying before, as far as being your own, harshest self-critic. Would you not also say, though, it's the way you interpret that, right, Mike? Because I would say that's good. That's a good thing. You should be, harsh, have that kind of high standards, that kind of thing. I think, but you just need to accompany that with being that cheerleader, like you're saying, for yourself at the same time. Because I definitely know myself, I'm very self-critical, very harsh. The slightest error, I'm like, what are you doing? Absolute nutty. Get it together. Come on. And then accompanying that with the same, uplifting, like, okay, we're going to get this together, punch it out, all good. Right. And I think that's when you have that synergy, that kind of like yin and yang type situation where they accompany each other, and then that's how you sort of punch forward. I just want to touch on that. You guys can go after that. That was just a small comment there, and we'll come back to it.
What do you guys think about this? By the way, I think it's. I have all kinds of ideas, but I'm eager to hear your guys with this comment by the Oracle. By the way, the Oracle has been giving out some great advice.
Patrick is imaginary. That's great. That is great.
That reminds me of alter ego. a little bit. And shout out to Akram. We had a really big conversation about this in the Discord. Later on today, we've got some live sessions going on in the Discord a little bit later on today. So, but the whole kind of, okay, good friend of mine, he absolutely gets off on that harsh criticism, right? For an example, you're in the gym, he wants somebody in his ear. I'm the biggest, I'm the baddest, I'm the strongest, I'm the fastest. Go harder, go faster. Who's going to carry the boat? I'm like, mate, carry your own boat.
Who's going to carry the boat?
But literally, he sees that.
David Goggins up in here. Sorry, Rich. That just hit me on a level.
He's telling me stuff like that. I have to turn the volume right down. I'm like, relax, man. Like, just calm it down, just a sec, take a step back. Now, I think it's an incredibly personal thing. There's certain things that traders will respond to really well. There's other things that just trigger. Now, what resonates with me is not that. Like, don't get me wrong, I'm all down for a little bit of healthy competition. I like a little bit of competitiveness, but it's typically in quite a controlled environment. I got shared a video not so long ago, and it was a trader. And I won't go into too much details. It was a live stream, and I checked it out for 10 seconds and I had to turn it off. The trader had so much energy, and I sat there and thought, if you trade like this on a daily basis, you will be exhausted. So I think it's super important to find our own way that kind of resonates, right? Like, this trader was literally shouting in the mic, and I was like,
you sure it wasn't Jonatan? It was Jonatan, wasn't it?
Guys, I wasn't going to drop any names. Like, don't do it dirty like that. But yeah, we're gonna find our own personal way. So if you have to create an imaginary personality to help you trade, and that is how you're able to hold your trades down, the whole kind of idea, like, if you genuinely research this and you look at world performing professionals, I'm talking about typically people that go on stage, they will have an alter ego and they're able to be that person without all the trauma and all the baggage and just turn up and be present. Whatever works, if you can find a way. And I spoke to my coach about this. I was like, do you think that creates long-term, like, split personality disorder? And she encouraged me. She said, well, rather than trying to ignore your emotions, what if you worked with them? What if you acknowledged the things that held you up? What if you Victor, I hope you don't mind me sharing. Do you remember 2 or 3 months ago, maybe 4 months ago?
Yes, I do.
Do you remember the heart rate?
No, I'm just kidding. Go ahead.
Okay. Do you remember what we were talking about before the presentation, and we were talking about heart rate?
This got swerved.
Okay, we'll go off the topic, but let's just.
I swear to God, Victor, honestly, you have no idea how sometimes you just pull out these just nuggets of gold, comedy gold, and you don't even know that you're doing it. It's just absolute brilliant. Poor Rich. He's trying to give a proper serious comment here, and Victor just slams him. It's just brilliant.
I'll be very generic about it. Sometimes when we prepare to do something, the body gets ready in a state that's a little bit out of line with actually what it needs to do. For me, trading needs to be calm. When I'm giving a presentation, it needs to be calm. Sometimes the fight or flight mechanism fires up, and all of a sudden we find ourselves tight-chested, tight jaw, legs jumping up and down, shallow breathing, heart rate going through the roof, and it's just good to recognize
right here. Sorry, Rich, but this is perfect Eminem.
Do you know what? Actually,
spaghetti, right?
There's a part of a script that I'm creating, and I kid you not, there's a part where I just stopped and went, knees beat, arms are heavy, vomit on his sweater, and I'm like, let's stop. But yeah, just acknowledging those things and then saying, hey, I choose to work with them rather than trying to suppress them and ignore them. For me personally, that's what I found works better. For other people, they want people shouting in their ears. They want a very noisy head. They like the idea of kind of a lot of stuff going on to distract them. For me to trade at my best, I need peace. I need quietness. I need calmness, and I need stillness. So imaginary friends, hey, I'm down to try whatever. Whatever works. Especially if Mike kicks me out of the group because he realizes I'm the weak link out of the 5 closest to him.
Rich, I was just kidding. You're allowed to share that experience. I think the viewers would like to hear a little bit of a behind the scene that chat we have sometimes.
You know what I do want to just point out is that Rich, the group is 5, right? So if I take, I think it's 5, or maybe there's 6. Actually, no, there is 6. So yeah, I do need to think about who I'm going to remove If it's not going to be the dog, then yeah, I'm going to have to think about who
Mark,
do I disconnect from.
Just remove me. It's fine. I'll be the sacrificial lamb. It's all good.
I think everyone's trying to kick themselves out. Okay, so real quick personal story. About 4 months ago, Victor and I, there was a big risk management event at the 5ers. A lot of time, a lot of energy had been put into preparing the visuals and the presentations and stuff like that. And I believe Victor was forecasted to go up ahead quite early on in this. Victor, you're okay with me sharing this, right?
Yes.
Okay, so Victor's due to go up and I'm sitting sort of in the background watching it, and it's a pretty big deal. I hadn't long been in this performance coaching role, and all of a sudden it's like, hey, can you deliver this big speech? Well, Victor has to go up and do an absolute blinding risk management talk. And Victor was chatting to us in the group, and I think it was Victor said his resting heart rate was either 170 or 180 beats per minute in the preparation and the anticipation to coming out and having a chat. And I was sitting there absolutely cool as a cucumber. You can see on my wrist, I've got a watch here that shows me my resting heart rate. At the moment it's 93, probably because I'm flapping the arms around. And when I was watching Victor, my resting heart rate was about 65. And I remember thinking, that's fine. I'm just going to acknowledge my feelings when it's my turn to go up. And I remember sitting there, and they started to talk as if I was about to come up. My heart rate just started going higher and higher and higher. And I think it got very, very close to where Victor's was. And it's these moments where the body is conditioning itself to do something very physical. And at the time, I didn't know how to deal with this energy. And a lot of public speakers, they get this and they say, go for a speed walk for 5 minutes, do some press ups, some star jumps. The body is literally filling the body is filling itself up with adrenaline, and it's the wrong thing. And I just see that in trading, I've done this many times where my body fills it up with adrenaline. It gets a bit excited, it gets a bit energetic, it gets a bit loud, a bit noisy, and then it affects the qualities of the decisions I make. So being super, super careful of how we're feeling and mindful of that, I think it can never hurt us as a trader. It can only ever help us. But yeah, Victor won with the heart rate anyway. His went up a little bit higher in preparation to that.
I think it's funny how so often different things affect us and we don't even realize it. And you know, as you said, Rich, you've got your watch. You know, you wouldn't have necessarily noticed it otherwise, right? And sometimes it's just having that, you know, that tool or that mechanism or something for us to be able to just monitor and be more self-aware of things.
Yeah, just quickly, sorry, because if your heart rate's at 60 beats per minute relative to 160, you will perform differently. It'd be very, very difficult to have the exact same output. It could just be the control you have on your words. It could be the decisions you make. So recognizing that our body is in a prime state to do something that might not be what we're trying to achieve could be just, again, mindfulness. It might help.
Yes. Absolutely. I think it's one thing I like about the anecdote is that when you see us here talking, and sometimes it may not be obvious, but we're actually, you know, it takes some you know, there is a you know, not everything is as calm as you think it is. Especially, I remember when we started streaming, and that incident where we had the show. You know, I've never been a public speaker, and even though I'm, you know, in a room by myself, it's daunting. It's something it's uncomfortable. It's way beyond my character, and having is who is that? Ooh, I like the
Who is this guy?
He's muted. He doesn't even. Yeah,
Is he new?
Honestly, supposedly. Yeah, I'm mute.
Is the guy new?
No, he's like, is he mute?
Oh, good to meet you, man. First time. Good to meet you.
Yeah, good to meet you. How's it going?
Yeah?
Good to meet you.
Doing well, mate.
Yeah.
What was your name again?
Mute.
Mute. Oh, good to meet you, Mute. How you doing?
Is that an answer or is it a request? He's playing again. He's playing.
He's muted himself. There we go.
He's too busy playing. Guys, it is the end of the hour, so it does mean, I presume, it's time for us to hand over to Jonatan. Is that right, Jonatan? Are we handing over to you?
Yes, that's right.
Yeah. So those of you who we were talking earlier about, Rich joined into a stream and found somebody with full energy and full enthusiasm and trading at lightning speed. Well, this is it. There you go.
How did that go, Rich? How did you find that person, and then how did it go? How did it make a lot of money?
We were saying it was you, Jonatan.
Oh, all right, okay. Yeah, I might be fast, but I'm not smart, you know.
The way he says that deadpan, it's just it's pure gold. Anyway, guys, thank you ever so much for joining as always. Rich, Victor, LJ, a pleasure to chat to you all on these segments. Next week is our final one, guys, so make sure you tune in for next week's weekly ABL podcast segment. Otherwise, yeah, thanks, guys, and we'll be back right after this.
Thanks a lot.
Bye.
See you.
Will you look at that? That was the worst segue ever. That was the worst segue I've ever seen in my life. How you guys doing? What am I doing here? Right, so this is the trade. GBP CHF, are we making money? We're making money. Well, unrealized money. We're making unrealized money. We're unrealized rich. Pre-rich. Pre-rich is what I'd like to call it. Let's see. How many of you? I'm gonna know, because there's like when I'm doing these live streams and when we're doing the sessions that we used, that Rich and Victor and LJ and Mike. All I kept seeing in the comments is like, oh, check gold. So how many of you want me to take a look at gold? Let me know. Why in the competition only allowed to have only one trade? I guess that's just the rules, the rules of the competition. Not sure why, but that's the rules. The second word, yeah, let's do it. The second word. Let's see how many likes do we have. How many likes do we have? We have 142. Let's get that to 150. We get that to 150, and we'll do the second word. Yeah, let's check gold. So we're currently in GBP CHF now. Interesting lot, guys. So let me tell you a little story about my life for the past week. So I decided that I was gonna get back into active trading, right? I've taken a pause. Okay. Rich says might be words. There's something with my audio, and you're absolutely right. My audio is better. Can you guys let me know if you guys can hear me or not? Let me know in the comments. Can you guys hear me? Let me know in the comments if you guys can hear me, if the audio is good. Maybe I'm muted. Let's see if we can. Okay, better. Okay, so I have two cameras, right? I have two microphones. I'm on my laptop right now, so I'm at home. My kid's got fever. He's playing, as you can see here, he's playing Minecraft over on the TV. Man, I love Minecraft. It's such a good game.
remember playing Minecraft when I was like 15 years old, and here I am, 35, and my kid is playing Minecraft. That's a testament to a game that really stands the test of time. Anyway, so I'm up at home here. I've set up the laptop. I can kind of show you guys my setup I have here. You can see I got the laptop right here, and then I have my secondary monitor. And this is kind of like my portable trading setup I got right here. It's pretty cool, and I can have it connected to a power bank, so I can be outside. I can go outside, bring the laptop and a screen, and I get a second screen as well. So and it's pretty cool. Plug it up to a power bank, and this can power the whole trading setup. Now that is really cool because I'm able to work from wherever I want, which is pretty cool. I'm able to work wherever I want. I'm able to do to trade from wherever I am in the world. Sounds like I'm traveling a lot. I'm not. I'm mostly just at home. But I like the idea of I got my office in the basement with the whole setup and everything. And then I got my portable setup here, which I can use on days where my son is sick, for example. Okay, so we got someone says that we got that 150 likes being hit. So I guess we're going to do that second word. So let's go in, and I'm going to see what that second word is. Let's see. Okay, second word of the day, guys, coming up. How does L Saint know about the second word? Because it is actually stop. The second word of the day is stop. And how does everyone know about it? Have I... Oh, you guessed the code already. Wow, that's impressive. Okay. Yeah, that's insider trading right there. I agree. That's kind of like the giveaway equivalent of insider trading. Interesting. Second word is stop. Yeah, the guy has just been using maybe a brute force AI system or something. The whole Gleam site is just going to get taken down. Oh, I love Victor. He's amazing. Okay, so that's the word of the day. I feel like I'm a little bit unfocused here, so I'm gonna get back to trading. I don't know how many entries there are to the giveaway. Actually, you know what? I'm gonna go in and see how many entries we do have to the giveaway, which means the amount of entries will, of course, tell us the amount of people that has correctly guessed the word. So I'm gonna go in and take a look at that. Yes, I am currently in a trade. I'm in this trade that you're seeing right here. GBP versus the Swiss franc, GBP CHF. I'm going to break that down. Do you guys want me to break down this setup that I'm currently in, walk you through the idea and why and how I entered the trade? or do you want me to go straight into gold and analyze gold? Okay, so it looks like we currently have 14 people have correctly guessed the secret word. That is impressive. 14 people have already guessed the correct word for today's giveaway. Good stuff. Good job, I should say. Guess it's not that difficult. But I guess if you do have the time, we have a Fed share, I believe, talking on Bloomberg TV right now, has been talking for the last 10 minutes, I believe. He is saying, I am not in a hurry to cut interest rates. Interesting. Okay. Let's see how what the market is, how it is the market reacting to that. Let's look at USD CAD, a little bit of a move to the upside. Let's take a look at the Dixie, see if we're getting any movements on that based on this comment. Let's see, we can look at 1 minute. I don't think we're seeing a huge amount of movement based on that. Let's see when that news actually came out. It came out 13:35, which is right here. So I guess maybe there's some type of movement based on that comment, but nothing too major. Michael says, who was it that questioned my EU trade? I would assume that it was absolutely everyone in the comments section did question your idea. But let's take a look at it. Who dared question Michael's trade on EU? I assume he went short, did he? I don't know. Yeah, he probably went short, and now after the fact he come in here and is like, look at that, look at that. I think what happened here, he probably shorted this level or something. Good stuff. Okay, we have Rubik piano violin, which is definitely a real name. It says GBP CHF idea, please. Yes, break down. I'm not gonna break down in this live stream, but you continue giving me all these wonderful comments. I might break down someday, but I'll be breaking down this trade. Okay, let's take a look at the looky here. Let's go to green list. We got GBP CHF. Why did I decide to enter this trade? I'll tell you everything about that. Sham says, Jonathan, looking at your recent trade, I think you got impressed by Alex's style of targeting 1-to-1 or 1.5R. Listen, Alex trades based on what I'm doing. I'm not trading based on what Alex is doing. You know what I mean? Alex trades based on my trading style. It's not the way around. You see that it's not the way it works. Okay? But yeah, me and Alex, we do trade rather similarly. He trades, that break and retest with the EMAs. I also trade break and retest, but I do incorporate the higher time frames in a bigger fashion than what Alex is doing. But you know what? I've recently had a conversation with Alex about this specific thing right here, and about the risk reward, and yeah. Can't believe he left us. Just like that. Just poof, gone with the wind. Took his break and retest setup and just went away. Yeah, 1-to-1 risk reward is it's not a strategy, it's just a I had this conversation with Victor as well, and we talked about Alex is in a better place. I would maybe, probably not better, but he's in another place. That's where he is. God, there's so many questions. Brother, can you tell him what the target of EU is? Michael, tell him what the target is. Yeah, no, he's not. I don't think he's enjoying much at all. He's probably crying when he opens up a crypto portfolio. I don't think he's enjoying that very much. He's probably looking at Solana like, oh, god damn it. Yeah, no, I think so. Michael says 1.61. Target of EU is 1.61. You heard it here first, guys. 1.61. That's where the money is. Right, okay, so we look at GBP CHF here. Now, on the weekly, we can see that GBP CHF is in a massive range. We're in a range that we entered in August of 2022, which is, how long ago is that? Well, you have to count, you have to do the math on that. But in August 2022, which is 2, 3, 4, 5, that's 3 years ago, we entered this range right here. We have recently bounced off the range lows right here, and we can definitely assume that there's a low probability of GBP CHF moving lower from here. It has not happened once in the past. So we're thinking that maybe we have probabilities to the upside. Also, this is good. I feel we have very less A+ setups this week. I think every setup that I've taken this week is an A+ setup because I'm only taking A+ setup. And I have a 100% win rate on the new account. I think how many trades I did? 4 trades. 100% win rate sounds amazing, right? But then you hear it's only 4 trades. But still, every single trade I've taken this week, A+ setup. Why? Because why would you trade anything else than A+ setups? Because maybe you're mentally handicapped, which I partly am, and therefore sometimes I'm not taking those A+ setups. We all have mental issues, so to say. I don't know. Anyway, GBP CHF right here, bouncing up the bottom right here, strong bullish candle on the weekly. Go down to the daily. We can see here on the daily that we have a accumulation range right here, break above the accumulation range highs, which is the area around 1.08. We have a break. We have a retest of the 50% fib right here on the daily, bullish on the daily. Looking at the 4 hour, we have that nice momentum coming in on the 4 hour, bullish on the 4 hour. Going into the 1 hour, we see that we have right here a gap between, basically this is where the market broke down, right? So this is the untested breakout area right here. This is the last low prior to the breakdown. When you have a strong breakdown like this, you want to target that last low pre-break, unless you find better targets on the lower time frames. Going down to the 15 minute. Oh, my screen is froze. Okay, so going down to the 15 minute, what we see right here is I see that price is approaching this level with momentum, right? But it's not that strong of a momentum. It's like down to support, consolidate, down, consolidate, down, consolidate. But here it's like boom, straight down. There's no pause between this breakdown and this level right here. So I view this as a gap, if you will, not a true price gap, but a imbalance between supply and demand. Basically, the market is a discounting machine, right? It's trying to always find equilibrium. That's the whole idea with a free market run by the forces of supply and demand. It's trying to always find that fair price, and sometimes you'll see these clear imbalances between that supply and demand. And I think this is an area that I feel the market is going to when you have a gap like that, imbalance gap or whatever, I can't really find the right word for it, right? But a lot of times you'll see that price wants to fill that area. And right now I feel like this level, which is the last low time frame support before that major volatility breakdown, is I feel like price is going to be using that level as a magnet and kind of start gravitating towards that level. In terms of a stop loss, always what I want to do when I go long, especially on a breakout like this, I want to make sure that I have my stop loss below the last swing low. And the last swing low is this area right here. And then I TP where we have that last immediate low pre-break, which is the area at around 1.0867 area-ish. Okay, so that's the trade on GBP CHF. Now let's see, we got a lot of questions here. Let me know, guys. Let me know in the comments if you want any advice on any technicals. Remember, I've been trading for almost a long time, and I've been doing so focused only on technicals. I do have a quite broad knowledge base when it comes to technical analysis. So if there's anything you're wondering, anything you need help with in your trading, let me know in the comments, and I can try to help you out and break it down for you. Good evening, man. Welcome to the live stream. Jonatan, is like a small canoe in a big ocean sometimes. Yeah, that's how I feel most of the time. I feel like I'm just wobbling around with like sometimes fairly big waves, sometimes small waves. Sometimes the ocean is just absolutely still, beautiful. It's like a mirror. The sun goes down, fantastic. There's like I see, trend lines in the skies. You have clouds in the formation of rectangle breakouts and ascending triangles. That's what my life is most of the time like. But nowadays it's more like a stand-up paddleboard, not a canoe. Canoe is nice. I have a canoe. I like canoe, but I also have a stand-up paddleboard, and I like the stand-up paddleboard, especially if you have one of those electric motors on it. That's super fun. Very cool. I like that. Right. What else do we have? How build an automated personal trading EA? Yeah. Okay. That's a question that would require a webinar on. So that we will do that in the future. Is it a good setup if I use a liquidity grab and using a IFVG add enter? You gotta be more specific, right? And you gotta be more specific, and you'll have to explain what is a liquidity grab and all of that. Okay, this is a great question. Dan Freeman. Okay, welcome. First of all, welcome to the live stream. I'm super happy to have you here. Super happy to have you here. Love seeing new people coming into the live stream. And the questions like this is the real questions. These are the questions that if you listen carefully and you follow along with my thought process and the answer, you might be able to pick up some bits and pieces that you can apply to your own strategy. So let's take 5 to 10 minutes here to really break down the things that I'm doing in the markets. So I do have the way I'm trading now. So what I've done is I've developed multiple different trading strategies, mostly trend following strategies, but also some breakout strategies. The way I'm trading now is I've seen that I'm able to trade quite confidently and profitably if I combine these strategy into one discretionary way of trading. But I don't recommend that you start with discretionary trading. I do recommend that you sort of start with building a system from a specific systematic system, okay, and try to build multiple of those, okay, to get to know the markets and price action in different way, and not only to get a feeling for price and to get to know price, but also to get to know yourself, right? You might develop a trend following system and you're like, oh, I like this is nice, I'm making some money on this, maybe you're not making money, who cares, but you like the process of trading a trend following system. A lot of people get stuck on that. They quit developing their system when they have found something they like. But what if you've never tried developing a breakout system? What if you then transition over and say, okay, you know what, now I'm gonna try something else. I'm gonna take the knowledge that I have from this trend following system and I'm instead going to apply to a breakout system. So let's say, for example, you have a break and retest system that you really like, and you see that sometimes there's never a retest. So let's just try to buy the break. Exact same system, but instead of buying the break and retest, you buy the break. And you'll see that, wow, this is much better, and it makes much more sense to me, because now you're applying slightly different logic and using slightly different price techniques that works for you better. Because it's all about testing a lot of different things and then sticking with what works for you. Now, I can give you, my complete way of trading, but it's likely not going to make a lot of sense to you. What I can do, though, and this is something that I'm actually planning for the live stream going forward, I'm going to have my own technical analysis mastery sessions within this live stream, where I teach you different parts that I believe is fundamental for you to know to develop your own system. One of those is to first understand, and exactly, Henry, you have it exactly right. This is something Mark Douglas talks a lot about in the book Trading in the Zone. First, you have that mechanical stage, and then the subjective stage, and finally, the end station for the profitable trader is the intuitive stage. And I believe I've been in that intuitive stage of trading for, I think, I remember saying on a live stream last year, around the summer last year, I remember saying things like, I believe I've come to the point where I'm now in that intuitive state of trading. I feel that's still correct, and I feel like I've reached that point, but there's so many small issues that I'm psychological issues that I'm dealing with. I'm gonna be honest with you guys, trading is very difficult for me at this stage when it comes to discussion of trading, because I am a person that is like, I have a lot of ideas, I have a lot of ideas. I'm able to I'm able to develop trading system because of my level of creativity and the processes that I have. But for me to then follow those systems is a completely different game. And here I see that I struggle a lot with sticking to my plan and following the plan and being disciplined enough to not take the bad trades. A little bit too often, I will have periods where I go on tilt. And that's not really a big problem because I have risk management in place. But sometimes, a couple of times every year, I'll have periods where I go on tilt and I also increase risk. And at those times, I completely destroy my trading results and I give back a lot of the profits that I've made throughout the year. And that's going to be my biggest struggle right now, this time around, when I'm getting back into manual trading. And I'm sharing all of this for you guys because it's my way of having kind of like a accountability partner, right? I'm sharing this so that you can hold up. I'm getting a lot of alerts here. I'm sharing all of this so you can point out here in the live stream when you see me making these mistakes, and you might be like, oh, wait a minute, you're not supposed to be taking that trade. That's not your system. That's not the way of trading. And that way I'm using the live stream to become a better trader. Anyway, it's important, I believe, to share everything. And in me, I'm very transparent with the way I'm trading. I think it's very important to kind of share that journey. One thing that I think is very important when you're developing a system is to there's basically two things that I think is very, very important, and that is to have the ability to understand the current trend and market structure, and then understand the break and retest concept. Because if you understand the break and retest concept, then you understand the breakout concept. So you have the breakout and you have the break and retest concept. It's kind of like variants of the same thing. And if you're able to understand market structure and trend, then I believe you have different variants of that will be all you need in trading, basically. And because you don't really need indicators, you don't really need drawing tools. All you really need, if you're able to trade like this, all you really need is to be able to figure out what is the most likely direction of price. Okay, so if you're in an uptrend and everything looks good, you might assume that the price is going to continue trading within that direction. And then that's the easiest part, right? And then the difficult part is to understand how can I get an entry into where I believe the trade will go or the trend will go. And there comes the breakout or the break and retest concept. So become very good at dissecting price action and market structure, and then apply the breakout or the break and retest to that analysis. And I believe that can form the basis of 99% of all the trading strategies out there. Okay, we got Deri in the background. Let me know if it's okay for me to add you. All right, how's it going, man? Welcome.
Good, mate. You?
I'm great.
I've been watching for a while.
Awesome.
Yeah. Where's Pedro and Victor today?
Victor?
Yeah.
Yeah, Victor's Pedro's. I think Pedro's on vacation.
Oh yeah.
And Victor is. I'm not sure what Victor is doing, but I think he's gonna come on.
That's sweet. How's everyone going? Thanks, mate. Welcome. Thank you. Long story short. So I'm just reading some of those comments, Jonathan. Long story short, isn't it?
So you got a good comment here. First, you said encourage us to develop a variety of systematic systems. Then you said you struggled to sticking with your trading strategy. No, it's not. It's not about I struggle to sticking with the trading strategy. It's about I struggle with. I guess yes and no, but I think what I'm struggling with is my trading system can give me good and bad signals, and I think what I'm struggling with is having the discipline to. It's basically impulse control. That's what it is, right? To like I see a good signal, and I can see a bad signal, and I really want to enter that trade that I'm not supposed to enter, and then on a good day, I'm like completely relaxed and I can say, okay, I'm just gonna move on. But then on a bad day where I'm like, you know what, screw it, I'm just gonna go into this trade, and then it's a loser, and you're like, well, what am I doing?
Yeah, I think as traders we all still get that. Even when you're profitable, you still get that, don't you? Like from time to time where you go on full tilt, and then you sit there and think, what was that? And then you come back then. But I think it's normal even as full-time traders to actually have that. Definitely.
Yeah, I mean, I think trading. I think trading gets easier, but
we're still human.
Yeah, we're just humans. So the issues and the problem that we're having when we get into trading in the beginning, it's like they're still there, but it's just easier to deal with. I mean, of course, when I remember getting into trading the first time, I didn't have any clue about risk management, right? But that's if we talk about psychology, I think we're all gonna have issues where we're gonna have to struggle with that impulsive nature.
Yeah, it's just human nature, isn't it? That is like literally human nature as well. Everything in trading just goes against it so much. It's hard to sort of, you just contain it more, don't you? And sort of learn to deal with it instead of just going full tilt 24/7 like I used to do. 24/7 on full tilt. When you first start in risk management, there's no such thing when you first start.
No, I remember when I started trading, I was counting like, okay, so how much money can I make if I risk 10% on every trade and I make like 20% a day? How much money can I make? It's like you have such unrealistic expectation when you get into this. Like now it's like, okay, how many single digit of percent can I make in a month instead of looking at risking 10% per trade and that sort of thing.
Yeah, it's so true as well. I think it's a massive thing people don't get it. Is obviously when you first start trading, you do get in for it for predominantly is the money side. But when you sort of switch out of that mindset and look at it, like you said, as percentages, that's where everything will change, or change for me, especially in regards to risk management. And I sort of sat there and went, okay, I'm chasing money, but if I chase the skill instead of the money will come after that. And that's where I sort of started switching my mindset. I was like, okay, it makes sense now. I'm trying to chase money, but without the skill, so I have no idea what I'm doing. I think that's where it switched for me.
Definitely. How's your week been, Deri? How's your trading week been?
It's been pretty slow this week. I've taken 2 losses this week. Been pretty slow though. We've been sort of like accumulating, and then the trades that we have, like from a higher time frame perspective, that I've placed have been like buy models, and then it's just stopped us. So we've had everything there, but it's just stopped us. So I've taken 2 losses this week. And the one loss, my trading view was lagging. It's like 10 seconds behind the actual charts. So I entered and it filled me like 2 pips above, so my RR was immediately damaged for that. But again, this is things that are good to talk about because people obviously see like social media and things like that and people trading, but these are things that you deal with as a trader. It's the norm, and people seem to think that you don't go through those things when you're trading, but it is normal even when you're trading full time.
Yeah, for sure.
But, yeah.
What are we thinking about? Anything you're watching today? I'm quite interested in this. Actually, like I'm not going to trade gold, but it's interesting price action here. What are we? What are you? Anything in particular you're looking at today?
There's not at the minute, purely just because I always like to see a sweep of a higher low first, and at the minute on EU and GU we range them, which is obviously my predominant pairs. There was a setup on EU, but it was from a 15-minute perspective. It's actually playing as we speak. But again, I'd like to, for anything I trade, I'd like to see the 1 hour at a minimum align with what I'm looking for. So just for me to go up for 15-minute is a no-go. But there's a nice move playing on EU at the minute for me. But that's obviously good because the hour wasn't aligned with it. I stayed away from it. But yeah, gold, I don't tend to trade. Do you trade gold much, that much?
If I'm going to be honest, I try to trade gold just because everyone watching the live stream kind of wants me to look at gold and analyze gold. So I'm trying to get more into understanding gold, but I really feel like gold's not my best pair looking at the statistics. It's from my experience when trading gold, there's a lot of stop hunts or whatever you want to call it, right? It's not like there's someone's hunting for those stops, but let's just call it stop hunts. But I do feel like stop loss gets hit and then TP gets hit after. Like it happens so often on gold, so I have to be having wider stops, and then the risk to reward is just getting destroyed.
Yeah, of course. Yeah, I tend to stay away from gold as well, just for volatility, but people love it, don't they? It seems to be, as a prop firm, I can guarantee that's the most traded. Gotta be.
Yeah, I think gold is our most traded pair, but that is like gets you thinking, you know, if the absolute majority of people are unprofitable and the absolute majority is focusing on gold, maybe it tells you a little bit about the difficult, like, and gold is difficult. So I think it's weird to me that the majority is focusing on I believe, one of the most difficult pairs to trade.
Oh, yeah, I agree. I totally agree with it. Gold is a no-go for me. Even since day one, I think that's where everyone starts on it when they first start trading is gold. People love it. But yeah, it's not for me. The volatility, and you're right, every time you get in, you seem to get stopped and then it'll hit TP.
Yeah, so I got my kid here at home. He's got a fever and he's playing Minecraft, and he's asking me a little bit about, I don't know what he's trying to build a fort, but all I see is his hundreds of cows.
How old is he, John?
He's 7.
Oh, nice. Still young, mate. Still living in the days. Yeah.
So right now he's just spawning hundreds of cows in his house. I don't know.
He's living the dream by the sounds of it, I'll be honest.
Yeah, exactly. No
worries.
Yeah, no worries, nothing. Is playing Minecraft. Kavika says trading levels make it difficult. I don't know. I think that's what I believe is quite difficult with gold, because even though it's respecting support and resistance quite well, I also feel like it's either going to overshoot the levels or it's going to front run the levels. Very rarely do I see gold like perfectly interact with levels. So for me, when I'm trading gold, I need to have the approach of first finding, seeing price reach a good level, and then looking for confirmation at that level, and perhaps using market orders and things like that, which is a bit different from the way I want to be trading. But looking at gold right now, I mean, I have to admit that this type of price action, like here, where we get this sort of descending or a falling wedge pattern right here, and we have a retest of that descending trend line right here, and then also in about 47 minutes we'll have the 4-hour candle closing. And if it's going to close with this wick, I do like what I'm seeing here. I do like what I'm seeing here for a possible long on gold. So I'm gonna see if I can monitor that.
Can I put one of these on the screen?
Yeah, you're gonna have to share a screen first.
Give me 2 seconds just to get this. Oh, that's the wrong one. I have to put it on here. 2 seconds. That's right. I use the app, which is not letting me share.
What do you mean? You're using? I mean TradingView.
Yeah, I use the TradingView app, but it doesn't let me share that. I don't think.
No, I think you have to. I think you have to like click it or select the app, and then share. Sometimes if you haven't selected TradingView in a while, it's not going to pop up on that on that share window or something. Right, I'm going to switch over to your screen.
Yeah, go for it. Yeah. No, yeah, I was just going to break down, obviously, see this freezes so much. I'm not on the app. Yeah, there we go. No, yeah, I'm just going to break down that the EU trade that I was talking about. For me, when I'm looking at, let me just get rid of this. When I'm looking at the charts, I always like to align from a 1 hour all the way down. Where's that frozen? 1 hour all the way down. So for me, until we sweep, obviously a high or a low on EU, from a 1 hour perspective, then I won't be looking at anything but something I call turtle soup. John, don't laugh, mate, because I know you hate the funny words like quasis and things like that. But obviously, we haven't swept.
Turtle soup. That's ICT, isn't it? Or was that before ICT?
Yeah. So we haven't swept the high or low. So from an hour perspective, I would be waiting till we obviously swept the high or low. But from a 15-minute perspective, we've got something I'd call a turtle soup. So obviously a sweep of a low here, and then the sweep of that high that came from that low here, and then we just look for manipulation both sides, and then we'll obviously get in on a something called change in state of delivery, which is here. We can back to mitigate that and just above equilibrium, which is obviously 50% of that current price range, and then sell off from there. You can see it tap 50% and just shy of that change in the state. I'll be looking out a target, obviously, from a 15-minute perspective, this low here, but purely because the hour didn't give me what I was looking for. For example, for me to take a trade of this sort, I would be waiting for where's that gone? For a sweep of this high, then I'd wait for the model to come in, and then I'd look for 15-minute, 5-minute, 1 minute to get into that. So for me at the minute, I'm just staying away. What's that, John?
No, it's just interesting.
Yeah, completely different to what a lot of people do. But I always wait for a sweep with either a high or a low. This is freezing constantly. High or low before going, and then I obviously align it from 1 hour, 15.5 all the way down to the 1 for entries. Then.
Do you when you're looking at a setup like that, do you take into consideration the overall trend or?
Yes. So I always I always try to either trade with. So I always trade with the trend, or if I'll trade counter trend. So for example, if we swept a low on the 1 hour, I'd then wait for a market structure shift, and then look to obviously go with that then. So I will trade a reversal, but obviously only if you get the confirmation that we're getting a shift in order flow or a market structure shift to the opposing direction. But yeah, I'll always trade with the trend pretty much. Never go against it. Very, very rarely. The only time I go against the trend is if let me just try and find an example of this actually, is if, for example, in this price leg here, we're looking for a rebalance. So 50% in a discounted to obviously look for the long position. This isn't the greatest example, but just for example, if we're looking for a rebalance, if I draw this out here, if we push to the upside and then we're looking for a rebalance back to equilibrium, what I'll wait for then, so this is a 1 hour time frame, what I'll wait for is a 15-minute time frame to say we're now shifting order flow to the downside, so we sort of break structure or give the change of the state of delivery. I'll then look for sells to come back down to equilibrium. So that's the only time I will counter trend trade, is obviously when we're looking to rebalance from a 1 hour perspective back to equilibrium, that price leg, which is obviously 50% of that price leg. Here you mentioned equilibrium earlier. I'll only trade that if the 15-minute gives me the confirmation that order flow is shifting to the downside and we want to rebalance. And then I'll go obviously 15-minute, 5-minute, 1-minute entries and then look for the rebalance and take it down to equilibrium, and then obviously look for longs from that area then.
So equilibrium, that's 50% fib.
Yes. Yeah.
Okay, so you're looking to, like, let's say you have a 1 hour move to the upside. You're then going into lower time frames to see if you can find a breakout structure and short down to the 15 minutes.
Yeah, exactly that. It's this is actually a pretty good example. This is just for an order flow, but if you take 50% of this price leg, it has come up into a premium. Obviously selling from a premium. Anything above that, I'd look for obviously rebalances. So when we take out this low here, and then obviously I'd drop into 15-minute time frame. So if this is the low here, we know that we are potentially going to get a rebalance after the low's been taken out. So this low's been swept. We know that potentially we get either a rebalance or we're going to get a shift of momentum to the upside. So I'd drop then from this area down to the 15. There may even be something there. Changing the state of delivery here. So we get the market structure shift or changing the state of delivery here. We then come back to rebalance, and then we push higher back into obviously the 1 hour equilibrium, which is around this area. So that's the only time I'll counter trend trade. When we get the market structure shift from a 15-minute perspective, and the 1 hour needs to rebalance after sweeping a low. Changing the state of delivery, back to rebalance from there, and then obviously we get a second change in the state of delivery here, which gives me the confirmation that we want to push higher, and then we come back and obviously push from there.
All right. Yeah. Nice. I'm looking at my GBP CHF trade right now. It's back at entry. Not looking perfect, but I'm still gonna keep that one open.
Do you trade CHF pairs often, John?
No, I've traded often.
Yeah, do you trade them often?
Well, the CHF pair, I think, is no, not very often. I feel that they're very messy.
Yeah, that's why I don't like it.
No, it's sometimes, I'm gonna go through the markets and I'll trade whatever I feel is makes sense. Yeah. But most of the time, I feel like they're just in a range, and it's just all over the place. So it's not very often. Yeah. But I have a big list that I'm watching once a week, and if I do see anything on a CHF pair, I'll make sure to add it. But it doesn't really happen very often.
Yeah. It's just a pair that I never really got on with, even from the start. When you first start, you trade every pair going, don't you? You've got all the pairs up, but I never really liked it from the beginning.
No, I am considering removing some pairs from the list to kind of make the process a little bit faster as well. Not have to check everything, but I'm also afraid that I might leave some good opportunities.
Yeah. Okay. Yeah, for me at the minute it's just accumulating at the minute for me. I'm not seeing anything. Any questions there? Turtle soup is a term for Linda Rashka. Can you go into that a bit more? Turtle soup is a term from Linda Rashka. Is that a trader? I'm not sure.
Yeah, so she's actually the first one to coin that phrase. She's an old school technical trader.
Really, I haven't heard of it. I'll have to have a look.
And I believe she's the first one. There's like a controversy, in the ICT world where people are talking about who coined the phrase first. Not that it matters, but I think she was
I'll write that down.
She was the first one, I believe, to mention that. She has a great YouTube channel, by the way. She's also one of the she's a market wizard, right? So she's one of the persons in the Market Wizard book, the series.
Okay, yeah.
That Jack Swagger wrote. Yeah, he's working on a new market series, Market Wizard series. Yeah. Did you know that?
I didn't know.
No, he's working on a new book where he is interviewing like some younger traders that are in the current conditions and actively trading right now. So that's gonna be very interesting to see, because most of the Market Wizard series are from more of those old school traders.
Yeah, all from that era.
Yeah.
Oh, that's interesting. Restaurant is the kind of guy who trades chart patterns, not really considers pairs in its history.
Okay, let's see. This is a kind of guy who trades charts and patterns and not really consider pairs. And no, I mean I consider the history quite a lot of those pairs. I know that some pairs I have as a trader, when you traded long enough, you kind of you develop this relationship with pairs. And what I mean like relationship is more like you get a feeling whenever you open up a pair, you get a certain feeling. And I know that whenever I open up Euro CHF or GBP CHF, for example, I always get the feeling of this is a bit confusing, it's a bit all over the place, but eventually you'll have moves on those pairs. And that's why I try to utilize the Trading Views alert function as much as possible, because if something's in a range, well, and you don't trade ranges, then you just put alerts above and below the range, and you'll get notified whenever it exits that environment. All right, Myth, das ist USD Bay or sell. Let's see. USD Bay or sell. Maybe I think that's a Bay. I do see. No, but I don't know. Like USD buy or sell. I don't know.
It's just ranging at the minute.
It is kind of it's kind of ranging, yeah. If I had to take a guess on the lower time frames,
let's have a look.
I think it might. I think it's.
I think it wants to come for this low. I'm personally saying it wants to come for this low, so I think sell. But again, it's in a range, so it's hard to tell. You can't really get much from this.
Yeah.
What are you saying, John? You're going to go long, aren't you?
I think it's going to go like 5 to 10 pips higher before going lower.
Yeah.
That's what I'm thinking. Other than that, I don't really know.
Yeah. I'd stay awake when it's like that.
The markets have definitely been a bit slow this week.
Very slow. I've noticed the same. I'm glad it's not just me.
I think everyone we had on here says the same thing. It's been slow, but I mean, we have also had some significant development on some pairs. I mean, there's been quite a lot of breakouts.
Yeah.
I guess there's just not a lot of sustained moves.
No.
Okay, Dulara wants an update on, I assume that is my position, so I'm going to switch over to...
Yeah, go for it, yeah.
The screen. So I'm still on. I'm aware of the fact that there's a bit of a change here in... You could say there's a bit of change in the behavior of the trend and the structure, because you have fairly clean moves here, and then this move, I guess it's pausing now and moving into sort of a range. So I do see that, but I'm still I'm still looking at the possibility of this coming higher, and it's a lot of it is based on well, it's based on the fact that looking at the weekly, GBP CHF should not be trading below this level, and whenever this level has been hit, we have gone, so almost every time we have gone from the level straight up to like resistance up here. Sure, this one was short-lived, and that one, right? But a lot of times we hit this level, and every single time we've had, at least a like 200 pip move to the upside. So looking at the fact that on the daily, this is a break and a retest of what looks to be accumulation zone at a level where we should bounce and hit the 50. This is a sort of almost like a high time frame range trade. What I do feel like the path of least resistance is to the upside. But if we break that low and we start trading lower, then we might have something different. We have a USD CAD breakout on 4 hour. So this is something that I'm watching as well. Yeah, this is actually so I do have a swing setup on this one, and I believe maybe I removed that one, but that was based on the break and retest of the like that level, which I believe is the accumulation range, and I think next target is up towards that area. But USD CAD I actually like, and I think we actually have a valid breakout here. So what I would be watching is let's see, where's that TP? I'll probably be looking at a move up towards this region here. So if you're a breakout trader, you're probably looking at this, but it's going to be a most likely low probability, as with most breakouts. I'm going to be waiting a little bit on this one. I want to see if it's a true breakout, and then I want to see if price can come back down for a sort of break and retest of this level. But it's definitely something I'm monitoring. We also have some USD news, I believe, coming up. Later we have what day is it? 21st. So we got the US. Well, first we have Jackson Hole, where we might have speeches from important people, I guess, and then we have US initial jobless claims, which is actually right now. Yeah, that's actually right now. Okay, interesting. Let's see.
Nothing. Doing nothing.
So US jobless claims comes in at 235,000. It is higher than expected. I guess it's higher than expected. Let's look at see if what reaction it has with price. We're seeing not the biggest reaction here, but I think we can see the whole area quite clearly. Yeah, I mean, this is on a 1 minute right here, and I like this breakout actually. If markets can hold this as support, I definitely think path of least resistance for USD CAD is to the upside, because if we pair all of this with the high time frame analysis, I think we see a hit of the trend line, hit of that horizontal level, the break and retest of a massive level, It's been in place since November, October 2022. We got a break and retest. We have accumulation zone right here. We even have a break and retest of that accumulation zone, and now we have a low time frame breakout here of that level, which also shows us a break and retest. Yeah, I'm gonna take a trade on USD CAD here. It's gonna say I'm on the high stakes account, so I gotta wait. But 2 minutes have already passed, so I'm able to get in on this one. Okay, so I'm just gonna open up the chart here. So placing some orders. I'm just trying to figure out if it would be possible to, if I have any good yeah, I probably want a TP hit right there. So where's the 1 hour? So I want to have my stop loss down here. Yeah, let's see on the 15-minute. Yeah, this looks to me this looks perfect. So I'm gonna get in on that one with a wide stop loss. Okay, so I'm long on USD CAD. So GBP CHF long and USD CAD long right now, and I'm not really. I don't really care about the risk to reward of this setup. I only care about being able to follow the trend here, and I believe we will have a pause in the trend around this area. So I want to be able to take some profits as soon as we reach the first areas of that level, which I think it's going to be around here. So this would be just a 1-to-1 risk to reward. It could have been much higher if I had a tighter stop loss, but I feel like price action is a little bit unclear in this whole area. So I want to have a I mean, I could have just put my stop loss here, but I feel like it's a bit unclear where, if this level is going to hold or not. So I would rather exit this trade earlier than let it hit my stop loss. All right, so I have a rule that says, no more than two trades a day. So I'm at that limit right now.
Why do we have that rule?
We have that rule, Victor, because to limit because I know that one of my biggest issues is overtrading, right? So limiting the number of trades. If I can, instead of focusing too much on like, oh, you're not supposed to be overtrading, so figure out why you're overtrading. Instead of figuring out why I'm overtrading, I'm just going to follow a set of rules, so I don't have to deal with that,
I totally understand that, and that's a very effective way. Even if you don't understand the reasons and the triggers, and you can still stop yourself from very easily with such rules, and that's why I asked.
We got Ashley in the comments as well. What's up, Ashley? It was awesome having you on this morning. Hoping to have you on next week as well. Make sure you guys go in and follow Ashley. She got some really good content on her YouTube, and I know she got a lot of plans for future content. All right, guys, I'm gonna dip off. I'm gonna take care of my son. I'm gonna leave you guys for the rest of the live stream. Yeah, it's all yours. It's all yours. I think so, isn't it? Oh, what? Yeah, it is. Yep. I had to check the schedule, but yeah.
I heard a hint of doubt right there. You weren't sure, but yes, it is. It is true. We'll keep the house safe while you're away, Jonatan. Don't worry. Deri
Yep,
here
okay.
we'll cover your back.
Awesome. All right, Victor, Deri, see you guys. Take care.
Bye, mate. Bye.
Bye. I'm gonna switch to my screen for those who are wondering why the screen changed. Let me adjust. Let me adjust my. I always find my head being too big. I don't know about you, but I find my head being way too big. That wasn't the intention. All right. So how are you doing? How is Uncle Scrooge in the background doing, Deri?
Yeah, all good, bro. All good. He's he fell down last week. To be fair.
Really?
He was hot. Yeah, I've got like these. I don't want to nail through it in case there's pipes behind there. So I've been using like sticky pads to keep it up, and it's been warm, so it melted off the wall. Got to stick it back up.
I see. Well, I'm a little bit concerned about Mick Scrooge. We don't want anything bad happening to a good old Max Scrooge. Deri, have you had a trade today? I remember you said you only trade, I think, once.
Yeah, once
per day. Have you had that single trade happen today? Was it triggered or not yet?
Yeah, this morning it was. I took a loss. I've taken 2 losses this week.
Hold on. I mute him.
Yeah, I took a loss this morning. But everything's just ranging at the minute. I don't know if you found it either, Victor. Like, it's been a tough week, to be fair. Really tough week.
I had a couple of losses. I believe it was Monday. On I'm not sure. On the beginning of the week, in any case.
Yeah.
Which were moves that did not materialize, which is normal. And I had yesterday. I had it's not a break even, but I considered them to be like no, they're not break even at all. I got 4R in from 2 trades, roughly. Which is this is when you have at least in my case, when I have I'm expecting a bigger move, and I have to cut it short, right? And the result aren't exactly what you expect, but I mean 4 hours, I'll take it any day of the week, instead of holding and just hoping, because if I held, it would have been stopped out probably, I think, today. So that's why I closed them and just keep whatever profit I got at that moment and just move on. Since the what I'm talking about is it was euro dollar. The move wasn't a daily move yet, or at least it didn't confirm to be a daily move. So I had no reason, no justification. For those who were in our workshop yesterday, I talked about this. If I don't have a reason on the daily time frame, that I cannot leave it for daily targets, and that's exactly what I had to do at the end of the day yesterday, taking the whatever the market gave me at that point.
Yeah, of course.
Difficult. I don't know. I didn't. Yeah. Okay. Yeah. The market can be. It depends on the what you're waiting for, and sometimes you get these weeks when you have all kinds of slow or mixed signals, where where you are. You're getting mixed signals, and that can be confusing. That can be frustrating sometimes, a lot of the times. So what are you watching? I know you already had your fix for today in terms of your trading needs, but are you watching anything? Are you the trader in you? Are you watching for something for tomorrow, or are you just satisfied find that trader in you by watching the chart? How many of you? Sorry, Deri. How many of you at home find yourself without any reason, like the trade strategy, your trade plan doesn't tell you should be necessarily doing anything with the charts at that moment, because either it's out of your trading session, or you already hit your max trades of the day, or whatever it is your reason, but you're still find yourself watching the market, trying to improve or get another edge, perhaps see some patterns. How many of you out there find yourself catch yourself spending time and enjoying, obviously, watching the market? Let us know in the chat, because it tells something about you, and I'll let you guess what that is. Deri, go ahead. Are you looking at?
To be honest, I'm not. I mean, I'm just waiting for EU and GU. Obviously, EU again this week, and GU for a large part of yesterday weren't correlating that well, and EU sort of stuck in that range between that external high and low. So I'm just waiting for it to break out to one of these areas at the minute. GU seems to, again, is just sort of been ranging. We've had a sweep of the low, a sweep of the high, and now it's just sort of stuck there again. But I'm waiting for EU to sweep a high or a low, essentially, from the hour perspective, and then I'll be looking then to see if there's anything. But at the minute, I'm staying away. Doesn't fit my trading style or my trading plan, so I'm staying away at the minute.
I understand that. You said if we were to sweep liquidity, would you still be able to enter despite the fact that you already took a trade today?
No, I wouldn't enter then. I wouldn't enter.
Perfect. That's what we thought. On GU, you're actually trying to catch a turtle right here, right?
Yeah, exactly that. Yeah.
the all elusive. Actually, they're not so elusive at all. I don't mean an actual turtle, but the turtle soup. Where you're expecting price to take out a swing high or swing low. In your case, you're waiting for both of them to be taken, right?
Yeah, exactly.
And then you take the opposite, swing the sweep, and then it comes back and you go the direction of the sweep. That's amazing. There's news that just came out about 14 minutes ago. Let's check what that was. That was the unemployment claims. I'm sure you guys were talking about that, perhaps, I don't know, before I came in. I did see the market move, EU in any case moving quite nicely. So it's interesting. In terms of trading, what I would be interested in watching is, or maybe let me break this down. Is there something that I would be interested in trading on? Look at this. This is the almost perfect balance right here. Look at price action the last couple of days, last couple of months, that is. Look at that. That is very, very beautiful in terms of how balanced currently where we are. That tells you perhaps how difficult it is to trade. If it's balanced, likely it is ranging in some time frame. Right. So let's check. We have the monthly order block that has been retested. That is a reason for us to look for a short on lower time frames. And that's exactly what I would be looking if you were to catch something on the weekly. We talked about this before as well. Maybe some people are still holding that short that we talked about in the Discord and actually on YouTube as well, which is we had the I believe it was Monday. Yes, Monday it's on the daily. It's visible on the daily. So be patient and I'll talk about it. You have the monthly bearish order block, which has been retested as we saw on the monthly, and going to the weekly, we have a fresh order block again being created. And that was after the market invalidated a bullish structure, right? Invalidation of a bullish structure, right? There it is. That's the bullish structure. And this is the invalidation right there. That tells us, at least in my view, what that is showing. That's the market showing its hand that it's likely to be going lower afterwards, right? Sometimes right away, sometimes with a detour, testing this bearish order block on the weekly. This is and before it continue its direction. So we have the weekly telling us so you have monthly and weekly reason to go short, and on the daily time frame, I don't know why it isn't showing. I think I know already. That's why I had to put on the structures, because I apparently deleted the price feed. This isn't the price feed that I typically use, right? Let's take a look at. There it is. This is the one. So something happened to my price feed, but that's fine. Let's correct that. There you go. I was thinking, why don't I have anything on my screen? Silly me for not realizing that's not the price feed. All right, so that's the this is what I talked about, where we have actually a quasi, right? Quasi, higher highs. There we go, breaking the low. And if that doesn't convince you that it's broken, then it definitely broke it the second time around and comes back to one of the two entry order blocks on that quasi. And what does price do afterwards? Hocus pocus, like magic. It reacts to that order block, not all the time, of course. The area to me to get in, or the moment, not the area. The area is this entry order block on that daily short. But it's when the market actually tells us that it flipped. It actually has reacted, confirmed that the sellers have come in, created a bearish order block, and I was waiting for this order block to be retested. You can see here my trade that I was expecting, because we were expecting this move, right? Expecting, not predicting, based on the price action right there. That's me suppressing a sneeze. All right, so the daily time frame tells us, creates that order block, and I was waiting. Let me take this arrow away for you to see. I was waiting for price to come back and tap into that order block. Didn't happen, didn't trigger me. That's why I'm not in the trade. And yes, that means that I did miss that move, which was very beautiful, and I talked about it, and I saw some in our Discord took that trade, not as a signal, because that I don't approve, but they had their own, they applied their own system, and they saw that, it makes sense for them, and they took the trade. At least that's what they told me. So that's the market moving away from one daily order block to another one in the opposite direction. Very technical, very logical, very clear to me how price is moving currently. So if I were to take a trade, and that's the intention that I have all the time, it would be for this order block, right, to this is a daily bullish, to be either a part of a quasi or a part of a fresh order block. And it is relatively fresh, and actually it is not part of a quasi, because if you take for it to be a long, it would have to be below this area, right? Below that 50%, below the half of that whole leg, and it is not. So it's not part of the quasi that I would be wanting to take, even though it did break that neckline, that's little peak there, that little wick. But it is fresh. So let's look at the daily. The H4, to see if there's a reason to take a long from here. If they were to take a long, then you can definitely target again the next structure in the same time frame, the daily, for your target, right? So because you're leaving a daily with a green sign or a green light on the daily, for those who were paying attention yesterday, and we're going to the next next structure in the same area. Hi, Daniel, Corey. Thank you for stopping by. I was gonna say shopping with us. I don't know why. I've never been into sales.
He's after a Victor mask.
Oh yes, he is. Actually, yes, indeed. I'm actually starting a new business, selling some edge mask. Just kidding. I'm not selling anything. Yes, I'll keep them all for myself.
I have a question for you then, Victor, just quickly.
Go ahead.
So I can understand. Do you take your entries from different time frames all the time, or is it always the same time frame?
I have a number of time frames that I take my entry from.
Yeah. Okay.
So that's the execution time frame, I call that, right? That's where I'm actually entering the market. Yes, so my confirmations and the last thing that I need to see is on 4 different time frame. It's a 1, 2, 3, and the 5 minute.
Yeah. Okay. Yeah.
Yeah. But all of them start with they have at least an H4 reason.
Yeah.
And they have to have another hourly reason as well, a 1 or a 2 hour. And that's every trade based on this strategy. I do have other strategies, but the one that I talk about every time is that one. And if it has a daily, like it now has in this case, has a daily reason for this trade, then I would be able to actually target the daily, but not completely. I'll take partials based on the H4. You know the drill.
Yeah.
All right, so this is the H4, which is within a fresh daily, and so it is reasonable to expect that price could have a push based on the fact that it's getting interaction with that daily, and it formed already a fresh order block, and that reaction could happen. And let's see on H2, do we have a reason? Yes, we do. Typically, with fresh order blocks, if they're visible on one, you want to make sure that it's visible on the other one as well. Is this a quasi? Yes, it is. That is a quasi for me. And you wonder, where is the neckline? And that's the neckline for me in this case, meaning this is the left shoulder and this is the head. That's the neckline. And price is actually, this is the left shoulder. It doesn't really matter, but that's the left shoulder. Left shoulder, yes. All right, so we are currently possibly creating a right shoulder. The momentum does look like it's going to continue, break it, and so on, but that's fine. Let that be the case if it is. On the hourly, there's also the same structure that is visible. So once you have that, at least that's what I do, I go and mark these areas, although I already know that they comply with the set of rules that I apply, and I'm gonna go fishing in this area. So I'm gonna park my boat here, and I'm gonna throw out the line and see what's grabbing. Do you go fishing, Deri?
I don't.
I highly recommend you try fishing out.
You enjoy it?
Yeah, I truly enjoyed it. I do it all the time.
On the charts or in real life?
On the charts, yes, on the charts. No, I don't fish. I need to be clear about that. I'm not a fisherman, although I do have my grandfather was a fisherman.
Okay, where are you from, Victor?
I am. That's a very good question, Deri. That's a very, very good question. I truly find that to be a very interesting question. So we have a quasi here. So this is the place where I want to be fishing. This is the place where I want to be fishing. It's quite wide, and actually I have certain rules for that. I'm currently in continental Europe. I know that doesn't, it's not very specific. That's 17 pips. This is 17 pips, and for GU, that is within acceptable levels for me, or acceptable value. So I have enough reasons to start looking. So once I have the area ready, I do not, until the area is invalidated by either the H1 or the H2 or the H4 being invalidating that area, there's really nothing to do in this time frame. On the hourlies, I go to the minutes and I start looking for possible reasons to get in. And guess what I look for? Type it in the chat if you think you have an idea of what I'm looking for when I do this. Chat, let's see if you can guess my next step. I'm going to check. Let's see. Daniel says there's a big movement on euro pound. We'll definitely take that we have to. I'll definitely check it out. But before that, let me check the chat if there's anything in particular. All right, so all right, so we do have a quasi here, and as I said, once I have the area, I do have to check with the turn of the hour, and we have one into minutes and some seconds. But when these structures, they get invalidated, the area, right, when we close below the last level, if the one of the pillars of the setup gets invalidated, then there is no trade. So I only have to check with the close of every hour if the setup is still valid, the area I mean. But while it is still open, the only thing I have to do, I say only, but it's quite a couple of steps, is check the other time frames, the 5 minute in this case, and see if we have levels to get in. I already know here that there are no levels on this time frame, and possibly in no other time frame as well. Let me double check. And for that, there's a set of rules, and some people find my system to be complicated. And that could be the case. Yes, that could well be the case. Actually, I do have an area here in the 3 minute that I can target. So I'll be waiting in my boat here to see if there's something catching my attention. You have, let's see, do we have something here? We don't. So we have another one here as well, and that is right here. And there, that's the one, and that's the 2 minute, and the 1 minute. I'm pretty sure the 1 minute will not allow us to take any trades. Yeah, that one, the structure is too big for a 1 minute. All right, so we have the 2 minute. I'll just confirm that it is a 2 minute. The 2 minute is valid. Yes, it is valid, and the 3 minute as well. All right, so I'm gonna wait for price to see if it reacts to this order block to turn around, right? And because of the H4 supports the idea, because of the H4 order block, and the daily as well on this daily order block, which is relatively fresh. Depending on your rules, you may or may not be trading this. This is the order block where price creates it, meaning the buyers in the past has shown interest to buy at this level. Price comes back relatively quick, and it is reasonable to expect that those same buyers, or maybe some other buyers, will want to get into that same level again and defend that order block, and you will have that push, which is basically big part of what I'm trading. Very simple, and even though some people think my strategy is elaborate, and maybe it is, we're all different, but yes, so I'm waiting for price. Let's mark this with an alert, and hopefully it will not sound at home where you're watching, and if it does sound, I ask for your I do apologize in advance, but I don't think it will sound. But in any case, so I'm going to be waiting for this to see how price takes and if anything, we can take a position live. I will adapt. If I take it on my account, the one that I show you guys, it will be slightly different than I normally take it on all the other accounts, because I'm a little bit private with the details of my trades. You wouldn't think that, right, Victor? A private guy? You wouldn't think that. Yes, I know, but it's still true.
Victor, do you know you mentioned that? It's such a good point that you mentioned that, actually, because when you look at trading is a business. Would you go to someone and ask for their business bank to see their business bank? You wouldn't do it.
No.
And that's what people don't understand is like, well, when you've got a trading account and things like that, that is personal information. 100%. I agree with you there, Victor. So that's so true.
Yeah. So what I love sharing. I'm very generous in sharing as much as I can. That's why I think I enjoy these calls as as much. So I gotta find how to maneuver between those two things that are true to me. One is I enjoy sharing. I want people to learn from the thought process, the way, the approach, the perspective, and all of that, and how you manage yourself and all of that. But there's also another part that is, my trades are really my trades, and they're not meant for public consumption. But I still want to show, generally, I want to show that I'm in the trade, and because I'm actually in the trade, I can actually take a trade on the account, on one account that I'm showing all the time, and still show an actual trade on a funded account. That's an actual funded account, but it's not gonna be the trade exactly, with everything exactly I have in my rest of my accounts, right? Before, what I would do is I would have my master account copy my trade to that particular account, right? The one that I show, but I would adjust the stop loss and the TPs. So it looks differently than it actually is in reality, using, a victor mask for the trade, basically, right? Right. So, but I thought, even in the entry moment, there's so much information.
Yeah.
And so that's something that I thought, I don't want to. Actually, that's too much information. I'm very generous with a lot of things, but there are few things that I've worked very hard to get that edge.
Yeah, 100%.
And I wanna. I think that's not for. And in the end, actually, I truly believe. I say this a lot, but I truly believe that there is a lot more value in learning how I got the edge than the actual edge that I have, because the fact that I learned how, I know how to get to that edge. The next time the market shifts and I need to shift with my rules to adapt to the market, I'm able to do that because I know the process. But if someone has only the rules with no understanding of how I got to those rules, they will likely not be able to adapt to shifting market condition, and they would be left with something that works but only for a limited time, or they wouldn't understand how to optimize it further or how to adapt or whatever. And it's I think, and I truly believe that it's a shortcut. It's the same thing with signals, right? It's a shortcut you don't want to be taking. If you really want to be a trader, you want to be the one generating the signal, right? You want to be the one who is able to generate the edge, the ideas, the strategy, the whole process, because that's gonna make you a sustainable, profitable trader. And that's something, because let's say I give you, and this I tell everyone who's willing to hear. Let's say I give you a strategy that will make you, I don't know, 5K a month with your current capital. And let's say and it works for, I've been trading this way, and I think the duration of my edge is way longer than that. But that's just for explanatory sakes. Assume that it works for 6 months. Right. In my case, that's not the case, but let's assume that's the case. It worked for 6 months, and all right, so you won 30K or whatever amount, whether it's 30, 10, 5, whatever, it doesn't really matter. But you want a decent, good amount. What would it help you long term in your lifetime if you could not reproduce that? It's nice. It's nice to have a big amount, have a big profit. It feels nice, pay debts, build things and whatever. But it's not very helpful. Not very helpful in the long run, because what you really want is a stream of income, right? You want to have a stream of fishes coming in, not just a dozen of fishes. And when you consume them, what do you do next? You're back to zeros, back to step step one. And so I really think that the focus should not be in the actual rules, in the actual strategy, and in that extent in my actual details of my trades. And I show my trades, but they're not not everything is exactly the way that I in that account that I show, and that's deliberate. That's very deliberate, and I think it's for a good thing. All right, so that's a nice topic right there. Let me go check the chat. I have a tendency. I don't know about you, Deri. I have a tendency. I have a tendency to forget about the chat. Not the people in the chat.
The actual. Yeah, I know.
The actual chat, right? Because we start talking and I find it interesting and all of that, and before I know it, we are 60 messages later.
Yeah.
I didn't see that, Borgov. I don't know what you're talking about. I did not notice that.
Yeah, I don't know what he's talking about either, Victor.
I have no idea. All right, so let's see. Yes, I come from Quasiland. You're absolutely right, Tuku. I come from Quasiland. I have, right behind Notre Dame. That's where I live. All right, so let's see, what else do we have here? I'm trying to find, see if there's anything in the chat, something we want to be looking at, or beyond the dollar, no, the euro pound it was that we still have pending to check out. All right, perfect. Thank you all for all this engagement. I love it. I love the engagement. I think it really makes us happy seeing all of this with all these all these engagements. All right. So okay. So we have the market reacting to this area. That's GU reacting to the area, but it did not react from the area that I was interested in. So that means that I wouldn't be taking, if it doesn't react, if it doesn't fit the bill, I'm not going to take the trade, right? So that's one thing. These rules also help me to stay consistent, because I'm not in doubt whether I don't get FOMO, because that's not my trade. Didn't hit my area, not my trade, right? I only want to be taking my trades. Right, and that helps me a lot with FOMO trades and feeling, I'm missing out or anything like that. I don't suffer from those things, not anymore. So let's see. We have, the other thing that I do is go to the 1 minute and see if we have new structure. So we can have structure from before, which is from the left, or we can form new structure. And new structure, you guessed it, it's a quasi formation where I'm always looking for the line. This is what I would then start. The lowest point, that would be the presumed to be the head, right? When you're looking for quasi that are not, clearly formed yet, and I will then look for the neckline. In this case, this would be the neckline. So no, in this case, that's not true. No, it is this route. Will be the neckline. Okay, so and that means that I'm gonna draw a line there, and whatever market does in between, I'm not interested. It can go here for hours, and I'm not interested unless it breaks this line or touches this area, right? If it doesn't do one of those two things, I am not interested. Simply not my trade yet. Okay, so I have the alert there. And we're going to be watching for price for the coming 50 minutes or so. So let's look at the, let's look for a, let's see. I'm not sure. Okay, anyways, I am trying to read. Manish, how are you doing, Manish? Of course, I remember you. I remember each one of you. Well, not literally, but I mean, I don't forget you guys. You guys are important to us. Let's see what else. Who else is in the chat? All right, perfect. I'm thank you, Morka. Thank you from Sweden. That's the it doesn't show, but it's actually there is a flag of Sweden. I intend to go to Sweden sometime in the future. What about you, Deri? Have you been there?
I've never been to Sweden. It does look amazing, though. I've been to Finland, but never Sweden.
Never been to Finland either.
Nice place, really nice.
Is it?
Yeah, we went obviously in the UK, call it Lapland. Obviously the Christmas sort of time. Yeah, it's amazing.
My brother was there, and they went to some exclusive resort where you do all these Pinterest things, activities with like ice bath, but not bath, actual, not a tub. In the lake, exactly. Yeah. They're great stuff.
It is an amazing place.
All right. Okay. Thank you all for Morka is agreeing with us. That's great to hear because you're living there. So that's good thing. Good thing you do agree. And Marina is here too. Thank you for letting us know, even though you're silently watching. Although I must say that's not too silently because here you are with your message. But thank you for seeing us and watching us, Marina. We are sending you lots of love, as we are for every one member who is watching. All right, so let's take a look at the euro pound. What do you say, Deri?
I don't trade euro pound too often, and again, for me at the minute.
Would you like to? Are you seeing something you want to share with us on this chart, this pair, this asset, or would you
on
like
euro pound? I'm not seeing anything on euro pound at the minute.
Okay.
For what I trade, no.
Okay.
No.
Okay, I'm switching through them, and as you guys can see, I'm not talking about the top-down analysis because I'm trying to do it quickly. Yeah. I'm very known to do my analysis very, very quickly. I'm faster than Flash. I take easily 20 minutes for one pair. So I'm saving you for, let's see. We do have a nice reaction there from the daily and the fresh order block being retested. That already happened, obviously. And there is a quasi, no quasi on this time frame. Yes, no, there isn't. Not on this time frame. So if anything, we can see we have an outside bar here. Saludos, David G. Saludos to you, our good friend David G. from I don't remember from where. Let me think.
David G. Germany, is it, with the G? I'm just guessing.
No.
Oh, hold up, buenos dias. That's gotta be Spanish, eh?
Yeah, it is. Good friend
South
of
America
ours.
Somewhere.
Yeah, it is in South America, but I'm afraid to be wrong. From Chile. Yes, I knew that, but I had some hesitation to be wrong. I should have just take the trade and worry later about the result. All right, so
I've heard it's quite chilly in Chile as well, as in cold. Is that true?
It can be. It can be. All right, so we have a fresh order block. On the weekly time frame, there isn't anything for me. I wouldn't trade this pair in that time frame. Here, neither. There was a reaction, very beautiful, but that was invalidated already, so I can take that out. Oh, nice. We have someone from the wives of Morka is from Argentina. That's neighbors from Chile. Yes, Argentina. Hola a todos. Everyone who is in South America. That's like a fifth of the world. Hello there.
You speak Spanish?
I do speak Spanish.
Oh, okay.
Yeah, I do. I do. Let's see. So, do we have something we can trade? This is the H4. This is the order block. There isn't a quasi. There is a fresh order block being created here. So anyone who is, if you're typing in the chat, if you're using Spanish, I will be able to read it. But it's if you want to, you can use that. That's up to you. All right, so we do have on H2 and H4 as well. Hasn't really touched. So let's drill this down. Hasn't touched. Actually, has it? Let's look at the low of this candle. It is 55.6, and the top of that order block is exactly. It has touched. So basically, this is the area that I would then look for the entry, right? For that would be our fishing area, right? So let's step into our boat and throw out the rod. Let's see. There isn't anything here. Not on the 5. Nothing here. The trade already happened, although, but I was just looking at to see if actually no trade here. I wouldn't be taking this trade, but obviously this looks like a long. And for whoever who asked us for this trade, let me see if I have it marked who it was. I think it was Daniel who asked us for euro pound. Daniel, what I would look for is indication that the market is holding this area, right? This between those two yellow lines. That's what I would be focusing on, right? And as long as that is the case, even if it comes back and does all kinds of things right here, even go backwards in time, as you can see, even if it does that, I would be happily taking longs from here, putting my stop there, and targeting perhaps this high and something from the left as well. But that's the area of interest to me. I'm not too eager getting in at current levels here because my stop would still have to be somewhere below here where it gets invalidated, and that is perhaps too much for my for a proper risk reward ratio. But if you can use this way in trading swing trades, and if that were to be the case, you could take the trade all the way up. Let's go back to the H4. These are not signals, these are just ideas. I am vehemently against signals because I don't think it helps you taking signals. And I'm all about helping other traders. So here you have you take it from the lower time frames, right? This area, assuming that it's not going to come back, and you put your stop below it. How low is up to you, and you target something on a higher time frame, right? You don't have anything here. You could target this top, that little top, but ideally you want to be taking the daily structure above us, because it is coming from where? It's coming from a daily structure, that outside bar. So that this trade makes a lot of sense to me. I could actually even take this trade on the account. Maybe I should do that. Let's take that trade because it is something that I can trade. It does fit. It's not exactly how I trade, but it is valid to me to take it. So I'm gonna do that. You can't see it, but in the background, I'm right here. I'm putting in the trade. And we can look back at this trade perhaps tomorrow or Monday to see how it is developing. I'm gonna take a trade. I'm gonna tell you guys how big the trade is going to be, and my risk. I'm gonna be risking. Let's see how much I will risk. I know my chart is not moving, but that's because I'm on another terminal on my MT5, an actual funded account, where I'm going to be taking the trade just now. But let me get things ready. So we are certain. There we go. All right. So I have it here. I'm going to put my stop a couple of pips below the area that I talked about. And my position, I'm going to be risking here $500. Okay. And that turns out to be around 1 lot. So I'm going to be opening up here 1.2 lots you're not. I'm not showing it, but I'm doing it in the background. And if you keep watching, I will. Whenever I show my chart, my trades, you will be able to see them in the future, right? So I'm taking it right here, and let's see if I'm. There we go. So I'm in, and all right, and so I have the. Let's double check what the target is, so I can move back to the chart. I'll put it around here. It doesn't really matter. 8700. I'll put it. Okay. So if you're wondering, this is just to give an example. It's a raw idea of how it's an impression of how I trade. But all right. So I took a 1.02 lot entry on euro pound long, even though, as I said, that's not exactly typical, but it doesn't really matter. The idea is much more important in this case. All right, so let's. I'm back on our charts. Big move about to go, says Daniel. I do agree with you. One thing though, Daniel, that from current level is not exactly, well, on my humble opinion, this is the area that I want to be taking the long from. If I'm targeting the daily, right, and I am targeting a daily structure, I want to be taking it from a daily demand zone. However, sometimes the market does not come back to retest, and in those moments, of course, our current entry would suffice greatly. Right, will be enough to catch the move. Oops, I took it away. I'm gonna leave it here, and we can watch it in the future. Right. So no, I don't want to be taking that out. Let's mark it. So the entry was roughly here, and that's not exactly accurate, but that's the trade basically. Okay. I'm gonna leave it in the on the chart so you guys can see it. And where is this? How can I? Send to back. Okay, so let's apparently I need to move this away. Okay, so all right, what's next, Deri? Shall we take a look at gold, the ever shining precious metal?
No. Gold. Let's go. Sure.
All right. Kennedy has a question here. That's from some time ago, but I will still show it. The currency strength meter. I think he's referring to something on perhaps on the chart that on the screen we have. And I'm not sure which one he is referring to. We probably have some kind of a currency meters, but probably not in this current picture, current background, current layout. So I would not be able to respond to that. But whenever I see it, I will get back to you, dear member. Yes, gold indeed. Yes, I do agree with you. Me taking it says a lot about it. Yes, I think it is a good area to take. However, the best area is down here. But sometimes it does not come back, and you can build a case to take it up here as well, right? Putting your stop below it and targeting the next structure above on the daily time frame. So let's move on to gold. How is the secret word coming along for you guys in the chat? Do you guys is it still going? Is it something that ended already? Do you know something about that, Deri?
The only thing I know is they're up to the second word. That's all I know.
Oh, okay. So the third word is coming anytime soon.
Yeah.
To a theater near you.
Yeah.
All right. This is a good one. Atish asking, what habits make What habits make the biggest difference in your long-term success? Wow, I think there's many habits, not just one. You have me thinking, which one is the biggest? So it's actually just one you're asking for. The biggest. I'll have to think about that. If you really want the best answer, I'll have to think about it. But I can mention on the top of my head, many things that I do that have helped me a lot. One is, for example, something I talked about yesterday, which is using top-down analysis, but bottom-up management. I talked about that in the Discord community for those who watched it. That's a very important thing that I do, and you could say it's a habit that helps me a lot. But is it the biggest one that made the biggest difference? Maybe not. But it is certainly up there in the best ones. Other things that I do is that I remind myself that this no single trade, and this one included, is should not and is not the win all break all trade, right? And if it is, then something is wrong, right? Every trade should be just one data point in your present. It's not in your history yet, but eventually will be just one data point in your data, in your history. So treat it as such. Why would you be overly excited or overly fearful about one data point in hundreds and thousands of trades? You shouldn't be. It's just another one. And once you get that idea down, that's why they say trading, when trading is boring, you're actually doing it right. It's because not exactly should be completely boring, but in the sense that it's not exciting as you would the first time you put the trade, right? Like you're with suspense watching, it's going up, going down, my I'm gonna win, I'm gonna lose. No, it shouldn't be like that. You should be just having a process. You go through it like any other job you do, right? You don't see the surgeon getting all too excited every time it makes a cut. It does it every day, multiple times a day, and that's how you should be trading. You should be just normal process, right? Whenever you see a surgeon, well, you don't see that, but resecting a tumor, of course they're going to be a little bit excited, they got it out or something like that, but it's not, that's what they do every day, right? So, and that is something you would need to have as a trader as well. Something it should not be, it should not excite you too much. You just follow the plan. You do have a little bit ups and downs. You get excited a little bit when something perhaps comes. The result is as you expected. Other times it's not as you expected. A little dip in there, but tiny dips, tiny highs. Should not be too. Whenever that's something, one big habit is considering, be neutral as much as possible about everything you do. And that's the same thing as saying being emotionally detached to the trade. That's a huge component, I think, in my success. I used to have emotional roller coaster with my, as my P&L goes, my emotions would go, and that's very draining. It's not good. That's not the way to trade. You shouldn't be trading like that. And it's by detaching, it's by considering everything to be just another day, another trade. It doesn't really matter. This goes too high to a TP or not. Nothing happens because you're doing by the book, and it's all fine. It's all part of the plan, as long as you follow the plan, of course. But if this is a good one, I will save it, and perhaps in another, or maybe later on, I will talk about a little bit more about that. Someone is sharing the first word in the chat, or maybe is it the second word? I don't know.
What's the second word?
Well, the thing is, though, for those who are already, they have the words. Remember, I know you guys want to be very generous, but the more people know those words, the less chance you have of winning. right? Because they're all going to be putting in, one heap, one, raffle, and all those that do know the words. And your chances will be, if there are 5,000 entries, it will be 1 in 5,000. But if you keep saying it in the chat, it might be 1 in 10,000 or whatever the number is. And that's not in your personal interest. Just a tip.
Yeah.
All right. So, I'm checking. All right. Someone from Sri Lanka. Thank you for joining us with your superhero looks. I like that. All right. So I'm gonna look at gold. Deri, do you have a preference?
I can go over what I've seen and what I would have traded.
Okay.
Yeah, go for it.
Would you like to?
Yeah, go for it. Of course, I'll do it. My screen is sharing.
Yeah, I'm gonna switch to yours. Is it? Yeah. No, that's. Let me see where yours is. There you are. That's yours.
Perfect. Yeah. So, gold for me. Again, I don't trade gold, but for me, there was a nice setup on it, and I still continue. We can still catch what I would catch. You've got this high, would possibly get ran. So, everything I look for, obviously, we've got we look for sweeps of liquidity, external liquidity. So you had this low here, this high, until we get a sweep of either that high or low. I tend to stay away, but we had a sweep of the low, and then from there, then we had a change in the state of delivery. So essentially, a shift in order flow. We broke the last bullish candle in this bearish move. We then continue to displace higher, which gives me more confidence that we want to push higher, and at a minimum take out this high. So we can push through, displace through, we can back then to a fair value gap and then continue to push higher. When we took out this high here, which is obviously the high that we would have been targeting from that area, back to that fair value gap, target that high. What I would have liked to have seen from there then is obviously the sell-off from the change in the state of delivery here, or the market structure shift. So we got that change in the state of delivery, so we were pushing to the downside. But all this is doing, I was talking to Jonatan about this earlier, is we're just shifting order flow to then push to the downside, obviously rebalance to inefficiencies further down. So we've rebalanced to inefficiencies here. If you can see, you've got this fair value gap or imbalance sat here that we instantly try to push through. We didn't push through, we whipped through it, and then it respected and we closed back inside there. So that then gives me confidence then to push higher from the 1 hour perspective. And then if I drop it to the 5 minute, what we got as soon as we came back into that was we had the change in the state of delivery to the upside again. So we shifted order flow, broke the last bullish candle in that bearish move to the downside. What happens then? We continue to displace through it. We leave behind that fair value gap. My entry would have been here with the stop below that low. Looking for longs, so my entry would have been here, stop below this low, and then obviously targeting that 1 hour high. But at the minute still, you've still got room obviously to go to that 1 hour high, which is here. Because we're still, when you look at it from a 5 minute perspective, we're still respecting bullish order flow consistently. We keep displacing, then we come back. What do? We come back to this fair value gap here, and then we react from there. We displace through this high here, We then come back then again to this fair value gap here. When we respect that fair value gap, we then displace through this high. We get through this high. What do we do then? Same thing again. We behind this fair value gap. We respect that fair value gap. So at the minute for me, we are bullish, and I would be bullish until we take this high. So just breaking that down from 1 hour perspective, we had a change in the state of delivery after sweeping a low back into a fair value gap, swept the high, then a rebalance that overall price leg. Then we drop it down to the 5 minute time frame. We had a change in the state of delivery, a retest of that fair value gap, and then obviously internal structure, 5 minute structure, we targeting this high, and we just continue to displace through highs. So we displace through this high, back to the fair value gap, displace through the high, back to the fair value gap, and we've currently respected that. The wick came in, and now I would like to see this high get ran. So at the minute, from what I trade at a minimum, I'd be waiting for this high to get ran before I look for anything else. But I'm super bullish at the minute.
Where would you be interested in getting in?
So if I was to take this trade, I would have got in after this rebalance. So for me, if we displaced through this fair value gap, so the last bullish fair value gap that was sat there, then I would have been preferring shorts. But obviously you can see we didn't displace. We whipped below and then we closed back within this fair value gap, which tells me we're respecting it. From this year, usually I'd like to see a 15-minute change in the state of delivery, but I will take a 5-minute from time to time if it's clear, a good size. Like with this, you can see here, not only did we displace through that 5-minute change in the state, we then came back into that and rejected from there. So original entry, if I traded gold, would have came from this area here. So I'd have been looking for tap back into that. As soon as we rejected, I would have been in and I would have put my stop below this low here, targeting then that 1 hour high.
Beautiful. And why would you be targeting that high or that level?
This high, because that's the next liquidity draw.
Okay.
Yeah.
And that's all of your targets are based on liquidity draws?
Yes. Yeah.
Okay.
Yeah.
And why do you have the stop there and not below the swing low?
Because for me, when we've already, price has already told me we don't want to push any further than this, because we've respected, we came into this fair value gap and instantly respected that and pushed away. So it's already told me we don't want to come further than this. If it does, then the trade's invalid for me, because if we run through this fair value gap here, that already tells me they've got a shift in order flow. So by the time we get through this one, then we've got a shift in order flow for me, and this then is more than likely going to get ran as well from here.
And another thing, do you always use the fair value gap on after the liquidity sweep, or?
Yes.
Okay.
Yeah.
So never before?
No, never before, no.
Okay.
I always wait for it to sweep first, yeah.
Yeah. Okay, perfect. Looks amazing. Looks awesome. I'm going to switch to my screen a little bit.
Of course.
As I'm also watching gold, and we'll be thinking about that. Let's see. Remember, everyone watching us right now or anytime in the future, I mean, if you're watching right now, that could be in the future. Does not matter. Whenever you're watching us in your time, remember to hit the like button. It's a very nice looking button, but makes a great difference. And next to it, while you're at it, think about the subscribe button as well. Okay. Okay, let's take a look at the market. I'm gonna do a top down. I'll do it as quick as possible. We are in a bearish structure. That's the fresh order block we're seeing right here. Don't forget that the market has been very, very extremely bullish for gold on the higher time frame. So keep that in mind. One little black cloud in the sky does not mean rainstorms yet. So the bearish order block, although it's a monthly time frame and that's very significant and everything, market structure is always more important and more stronger because it contains more data than just one order block. Okay, but still, we have a bearish order block right here, and you should treat it as as such, a bearish monthly structure. So then we have the price has been going sideways for some time, but with a bullish undertone. As you can see here, a trend line showing how price is reluctant to go even lower, increasingly reluctant to go lower. That's on the weekly. And if we zoom in, you will see how difficult this market is. And that's why I think I've been hearing it for some people already, or this few weeks and actually perhaps even few months, because the market is quite compressed. See, all these structures, all these order blocks are being created next to each other, almost overlapping each other. And that tells you that the market is not as directional as it was before, meaning you need to adapt to that as well, meaning your target should be just to the next level, and don't be a hero trying to think it's going to break out and continue. It might, but that could be, who knows how much and how long in the future. That's one thing. Someone asking here, saying, I tried using order blocks plus quasi, but it takes too much time waiting. Welcome to my world.
Welcome to trading in general.
Yes. That's how it is. I mean, you can't get it all, right? If you want to have edge in the market, you can have edge and also have it frequently. Sometimes you can, but that's the trade-off. I'm happy already that I have edge in the market, and that it doesn't come as often as I would want, that's I can live with that. Okay, so now you understand as well. Some of you that I'm able to stream an hour, 2 hour a day, and not worry about my entries, because they don't come along every hour. And even though I do take my trades while streaming, it doesn't happen very often. So I'm free to do other activities as well. And all right, so on the weekly time frame on on gold, we don't have any quasi right here. No quasi in sight. What we do have is fresh order blocks, but as you can see, they are so tied to each other, and basically you would want to be taking just one to the next, one structure to the next, and that's it. That's your playing ground, and that's something, and that's how I trade. And I recommend others as well to trade a ranging market where the market is not even though this has a bullish undertone, it's still very compressed. It's not really going too far before coming back, which is very common for Forex, not so common for gold. But hey, even gold is like this sometimes. So you have two fresh order blocks. One that was created last week, hasn't been mitigated yet, and you have another one, which is the one we are currently in, which is a bullish order block. This is the immediate retest because the move hasn't really left the order block since its creation, and that's valid to be traded. So basically, this order block is a reason for me to go to the next order, next time frame, to look for a reason to go long. If I can get it, and here you are, beautiful reason to go long, fresh order block being retested right there. So that means I didn't trade this, in all fairness, but I would be looking exactly for that reaction in gold to trade long. Since it is in the weekly and I have the daily, the next thing I do is go to the H4, and within this daily order block, look for a reason to go long. And actually, that reason would be, let's see, that reason would be this one that hasn't been retested yet. That order block, and actually now that I am looking at it, I need to change. It's an entry order block. Do I have it already as such? No. It's let's change that into an entry order block. Possible entry. That's the area that I want to be taking the long from, right there. But the market is creating another fresh order block that has some relations with the daily, the reason, right? If there is some kind of overlap with the daily, that means that I can use the daily as well, meaning I can use it for targets. In this case, it does not really matter because the daily is only here. That's the target that I would put based on the daily. The weekly, however, is another story. Well, not really either. This would be the area that I will target based on the weekly. Let me mark that like so, and there. As you can see, they're very tight. So with that, I just trade to the next level, and if it's tight, I take them anyways, no problem on that. We have a pound alerting us that the fishing area is being visited. So I'm gonna go there in a few minutes. But first, let's finish this. This is a gold. So I would be waiting for price to finish this this candle. This order block hasn't been created, hasn't been printed yet. I needed to close above this high for it to be an actual order block above this high. So we'll have to check that in 14 minutes. Let's mark that high. If it closes above that yellow line I'm just showing there, then this would be an order block, and I can wait then for price to come back into that order block and catch the move as it moves out. Okay. Hasn't happened, but that could be one trade, and the other one is this area right here. If and when price gets there, I would be waiting for a possible reversal on the lower time frames and get long from there, right? But that hasn't happened yet. So keep in mind the level to be to be closed above. It looks like market is not going to do that, but you never know until it's over. It's 3,342 with 23 cents. The price of gold, if it closes above that in 13 minutes, then I would definitely be looking for a possible area, this area, to maybe I should look already for a reason. I don't see any H1 or H2. So that makes you wait for that order block to be created. Right? Maybe it'll be created in the future. Maybe it will not be created, and you can't force the market. Obviously, you have no saying in the matter. Okay, so that's gold. Let's look at the pound. Pound has been alerting us. I hope it hasn't been sounding in your, at home, in your headset. However you are watching us. Let's take a look at, we were looking for that area which is being violated, the fishing area, and I think that's good. I rather have the area violate and not be reactive. In this case, it wasn't reactive. Look at that, easy. Then I just discard the area. Nothing to worry about, right? You have to wait for confirmation. Market needs to show you that it is switching back, reversing. Otherwise, you do not want to be taking the trade. By the way, that's the H1, the H2. Let me take away the H2. That's the H2, and let's look at the 3 minute, not the H2. 3 minute. 3 minute is going to be invalidated and there you go. Was invalidated by a pip or maybe even a point. And that's fine. I don't want it anymore, right? I'm allergic for once it invalidates the area. I don't you wait for the reaction. If there is no reaction, you don't want to be in that trade, right? So you wait for it to let the market confirm it's actually reacting to the level. That means that I can still use this area, but I will have to look for a new quasi in my execution time frame. If it doesn't come up, then easy, no trade to take. And that's exactly what you were talking about the who was it? Let's see who it was. That was who said it took a long time to get entries when you're being selective. There you go, perfect, Hitesh. That's exactly right. That's actually a good thing, right? You only want to be getting in on the best one, and not all structures are going to be, with proper alignment, with proper structures, and you only want to be taking the very, very good ones. And that means that you need to be patient and waiting for price to do exactly what you're waiting for. On the 5 minute, there isn't actually. Let me see. Did I have was it a 3 and a 2? Let me double check, because I do see something that I could have. Was it the 2 entry order blocks? Were they 2 and 3? Wasn't there a 5? That's a 3 and a 2. Let me double check if 5 isn't 5 isn't so I have nothing to worry about. Okay, perfect. Then I don't want to have part of it. Right? If there's no entry order block on the right time frame, then simply that's me understanding that the market is not moving the way that I recognize. So I'm gonna just let it go, and it likely means that the market will just continue to go down, and that's obviously not something you want to be going long in. And even if it does react and still go back higher, I would just understand that that's someone else's trade, not mine, right? Because if it were mine, it was not supposed to close there, right there. I didn't mean to move that, but you know what I mean. That close wasn't supposed to happen right there. Okay, so but Hitesh, thank you for trying out what we're sharing here, and that's exactly what we are looking for. We want you guys to not take what we say and go run with it. We want you to test it, build your own data on it, and then see if it works for you as well. Let me do it on the 4 hour on euro dollar. These are trades that I took today, just to the next level. on euro dollar. Let's see, that was the trade from yesterday. I closed them around here, I think, right? It wasn't great profit. I think 2R each one of them, and this one was this morning targeting just the order block right here, right? That's the first trouble area, the top of that structure, and that's it. But we still have an order block here not an order block, a quasi on the 5-minute, and is the area still active? Yes, it is. Yes, it is. It's a quasi on the 4. It is a actually it isn't. This is on the H2 and H1. The area to be interested is no longer this, no longer that, but this. All right, so I'm only interested in this area, and I'm looking for the overlap. This is an entry on the H1, yes, and I'm looking for the overlap between these two. All right, so I'm looking for this and the H4 level there. Right, so that's the fishing area. Let's get our rod ready. And we can see that the market is already below it. As soon as the market is below it, that is a sign of weakness of the setup. And you can still look for entries, but here, no, I wouldn't. That's nothing. There's no quasi there, nothing there, nothing there, and it's not going to be on the 5-minute. Yeah, so there's no sign of any attempt to recover or to reverse from this area. I'm only looking for this, right? The market needs to react to this area. If only I can catch the right instrument. Right, this is the area that I want to be respected, even if it's not precisely respected. As long as it touches it and does not close below it. So in 6 minutes, we'll see if it closes or not below the area. This is the area. If it closes below it, I don't want to have anything with it anymore, and it'd be like instant allergy to that area. To that setup. Have nothing to do. Don't want to have anything to do with that setup anymore. I found that to be highly helpful for my trading, understanding when something is valid, and the minute it's invalid, let it go. Not that I get angry at it, but it almost looks like I do. Like I have zero interest in that area. You can see how it closes. Are you if you're looking at the Deri, if you're looking for a trade right here on euro dollar, is it in a place where you would be looking for, considering the sweep of that low, of the previous low, swing low?
So the guys in my obviously Discord have short already on that move. Okay. Essentially, where we swept the high, it was an internal high. We then had change in the state of delivery. We rebalanced back to that and then looking to take the low. But yeah, now it's swept the low. Now I'd be looking for potential reversals from that area to go back to the high. Yeah.
Okay.
Yeah.
Let's see. We have. Let me take Jonatan from our. Not sure how I can do that. Apparently I can't. Yeah, apparently I can't. Okay, so let's move back to so would you be looking for a long? You said yes, right?
If we get, it'll be a while yet, but I'd have to wait now for a 1 hour model to come in, then a 15-minute. Should possibly be tomorrow if we get that. But
hold on. You said 1 hour model?
Yes.
Are you talking about market patterns or
this?
Like a catwalk model?
Yeah, like a shift in momentum. So
okay.
Yeah.
I just wasn't sure. Go ahead.
Yeah. So just for example, we had swept this. It was an internal high. It was a 15-minute high here, but we'd swept that. We put in the change in the state of delivery. It then rebalanced to that and then pushed lower. But this trade was taken from a 15-minute perspective, from a well, we call it turtle soup. They've literally just texted me. I've got 2 other guys that work for me that have taken the trade on the live session in the Discord. So sweep the high, sweep the low, so turtle soup, and then obviously we're looking for a change in the state of delivery from here. So a shift in order flow, which is this last bearish candle in that bullish move. We then come back to that. Obviously, we don't trade outside New York, so we came back to that, and then same again, push to the downside, changing the state of delivery, and then you could see pre-New York, we were obviously pushing back into this, but obviously rejecting and respecting it constantly. And then they took it. The boys didn't actually take it because it was through news, but some of the members actually caught it. But it was a 1 minute entry model from here, then obviously just targeting this low. So that was the entry they took, and it was from here, yeah, from this change in the state of delivery here. As soon as it ran through this change in the state of delivery here, they were in short. As soon as it closed below, and then stop above the high. And then obviously targeting that 1 hour low here. So that was the trade. They've just, some of the students have obviously taken mental stayed out because it was doing news, but some of them have caught that move, and you can see it to perfection here. This is a prime example of turtle soup: is sweep the low, manipulation of the low, manipulation of the high, changing the state of delivery, respect the change in the state of delivery, changing the state of delivery with the fair value gap, and you can see it tries to push through but respects it, and then that's when they've obviously caught that trade then from a 1 minute perspective on the reaction to take that low.
All right, perfect. Okay, someone asking for your YouTube channel.
YouTube channel? Yes, it's my YouTube channel is Deri Morgan FX.
Maybe you can put it in the chat, or
how do I reply, Victor?
I think you can below the chat. Isn't there a place where you can?
No.
Okay. Well, in any case, I don't know. Spell it out again, and
so, yeah, it's Deri. So the way it's spelled. In fact, can I change my name on here? How do I change? Can I edit this? Edit name. Here we go. I'll put this as my name. Deri Morgan. There we go. So if you check my name now on the screen, it should be changed. Yeah, there we go.
There you go. Yeah. All right, that's good. That's very fast thinking of on your side. And that's what we need as traders, right? Fast thinking. Well, not all the time. If you're in the higher time frames, not necessarily. All right, so EU. I'm going to switch back to my chart right before we end the stream. But yes, sadly, we have come to that moment again in in the day, right? That moment where we close our chat and leave you all alone. I know. Let's see. We have on the hourly that we close below. We're at 36 seconds to close below that level. It looks like we are going to close below, and if it does, then I'm not interested anymore in that level. So that's something you could be looking at while we close the stream. I would like to thank everyone. Yes, everyone who is watching and everyone who's not even watching yet. Thank you for your, not just kidding. Thank you for your attention. I'm happy. We are, on behalf of everyone, we're happy for your presence, your attention, your engagement. Keep those good questions coming. If you find, if you think of any question, anything you want to ask us in the meantime, while we're not alive, write them down and come back to the chat on our next occasion. So, Deri, do we want to perhaps give out some final words before we conclude?
Final words. Be safe when trading.
Good.
I can say just I appreciate everyone jumping on and asking questions as well. I enjoy these sessions every Thursday. It's good to get on with Victor and his mask and have a laugh, and obviously go through some trades as well.
Perfect. Well, I was gonna say be safe, but you said it already. Take care, everyone. Catch us on Discord. Discord community is open for everyone. Everyone having an account, but that's everyone. So get to our Discord community where we have on every weekday a workshop just for you to elevate your skills, your trading, and have some good time learn a lot in the process as well. That's it. Good luck to everyone, and be safe.
Yeah.
Bye-bye.
Bye, guys. Bye.
Bye.